respectively, how many people have we reached out to. A wide outreach ensures that underserved populations, especially rural women, they gain genuine access to credit and financial tools. Depth of outreach, on the other hand, this is a measure of impact quality. At Pagamani, we look at 4 critical dimensions to assess the breadth of our outreach, which is what is highlighted on the screen. So firstly, it's average loan size. This indicates the scope for business investment and household needs. To grow their loans, clients need to have shown good credit discipline, growth in their business, and savings. The average business value metric, Pagamani assesses the business value based on a simple balance sheet which includes stock, cash on hand, and debtors. Average savings. We encourage clients to save small amounts monthly for unexpected life events, and this also provides a reflection of financial literacy. The average PPI. This is the Progress Out of Poverty Index, which tracks multidimensional poverty. It is based on an international standard customized for the South African environment. The PPI answers 12 questions which provide a score that indicates the likelihood that the household is living below one of the poverty indices. Together, these 4 metrics show how we're not just growing in reach, but in real measurable impact. Lives changed, poverty reduced, businesses strengthened, and when asking a client about impact, most talk about improvements to their home, better education for their children, and better food that they have to eat in the meal. The previous slide.
Which slide? This one?
Yeah. Yes, thank you. Okay, so governance and related matters. In line with the Companies Act, Pagamani will be required to establish a social and ethics committee when it reaches a public interest score of 500. While we believe that this will only be in 2 to 3 years' time, we've started the process now to ensure governance structures are in place. The social and environmental performance management is an international model incorporating universal standards, and this is also something that we have aligned ourselves with. The standards mentioned here are number 1, social strategy, committed leadership, client-centered products and services, client protection, responsible human resource development, responsible growth and returns, and environmental performance management. We are also registered with the Financial Intelligence Center as an accountable institution. We actively seek ways to reduce the cost of serving clients. Recently, we digitized our loan application, onboarding, and repayment processes, moving away from paper-based systems. This transition improves efficiency, shortens loan turnaround times, and still ensures compliance with the NCR's 5-day requirement for loan cancellations. In addition, we are lowering costs for clients through the introduction of a reputable national payment system, which provides safe, convenient, and affordable repayment options closer to their homes and places of trade. This reduces travel expenses, saves time, while ensuring access to essential financial services. We do want to acknowledge that there is room to improve our operations. There is room to strengthen our monitoring and evaluation, and most importantly, to review the cost to clients. Pagamani is a learning organization committed to continuous improvement and responsive adoption. We are also open to state support that can ease the cost burden for our clients through measures such as, first and foremost, the treatment of VAT on fees charged by public benefit organizations as exempt supply. This will be consistent with their tax-exempt status and social mandate. We also advocate for increased grant funding for accredited microfinance institutions to subsidize outreach to women who are at the bottom of this economic pyramid. We also advocate for subsidies for digital infrastructure to expand mobile payment systems and reduce transaction costs in rural areas. State-supported training and capacity building is also a key area that we require the state to support us with. Legislative recognition for development microfinance institutions to mobilize limited client savings under strict regulation, either through a dedicated microfinance deposit-taking license in the Banks Act or expanded provisions in the Cooperative Banks Act, with safeguards, of course, such as deposit caps, liquidity requirements, and Reserve Bank oversight. I thank you.
Thank you very much, Pagamani, for the presentation. Honorable members, without any waste of time, there is the presentation of Pagamani. Can I see by a show of hand if ever there are questions or recommendations or advices? The honorable member.
No, Chair. I want to make the proposal. My proposal will be, let's take all presentations. Then thereafter, you give us an opportunity, whether you allocate us 15 minutes each, so that we can be able to do the exchange with each entity. I'm raising that, I'm making that proposal, Chair, because I'm afraid that it might take more time with one entity, and then we ended up not doing justice on others. That is the proposal I wanted to make.
Honorable members, I've seen the hand of Honorable Carroll and Honorable Matulelo. You're supporting?
Yes.
Honorable Matulelo.
Thank you very much, Chair. No, I support the proposal.
Okay, thank you very much. Then we can move to Agri Seed Capital.
Thank you, Chairperson. I'm going to start off my presentation slightly differently. And the reason for that is I would like to provide contextual reference to the clients that we work with. As an anchoring statement, Agri Seed Capital proudly operates within the agricultural sector. And I'm going to preface my presentation with two statements that offer areas of reflection. And the first statement, which is a real-life case scenario, is that of a farmer, a youth farmer within the Brongospruit area. His name is Simpiwe Mashiane, 31 years old, has grown up in a farming community, has seen generations of farm workers through his parents and grandparents, and through land reform programs and through a community property association, has access to over 500 hectares of land. He's a skilled farmer himself, having worked on commercial farms, knows how to operate tractors, knows how to operate harvesters, but faces a very big conundrum of access to capital. So as a reflection point, my question would be, without any credit profile, without any financial statements, without any collateral, where does Simpiwe go for financing? And the second scenario would be that of another farmer in our portfolio, Mr. Mtutuzeli Majola, again a youth farmer in his late 20s, has access to 85 hectares of land in Carltonville in Gauteng, and managed through ingenuity and resourcefulness to be able to get support from the Gauteng Provincial Department of Agriculture in terms of establishing infrastructure on his farm, a piggery on his farm, and through his resourcefulness been able to raise capital to buy a few piglets to operate from. And with about 25 piglets, where does he go to then start scaling his operation? and making sure that one day he can operate on a commercial level. So with those statements in mind, I would then, Chairperson, like to pass my revolutionary greetings to you, Chair, to the honorable members of the committee, to the DG, to the DDG, and to the CEO of SITFA. It is indeed revolutionary greetings in nature because agriculture in this country is in need of a revolution. And I speak of a revolution because agriculture has so many elements that contribute to various aspects of the economy. Not only rural economic development, but in its nature, it has the ability to be transformative in terms of providing access to food production systems and in terms of taking care of elements of unemployment. So the issue of agriculture is very socio-economic in nature, very socio-cultural in nature, very socio-political in nature, and in its overall makeup, it is socio-transformational. And I highlight this because agriculture is in need of a social change. And as Agri Seed Capital, we see ourselves as a catalyst to that social change that is needed within the financing model. By way of background, Chairperson, my name is Mpoma Titibane, and I hold a doctorate qualification and a PhD in agricultural financing. Agri Seed Capital was born out of a model that has been studied through many case studies where I've traveled internationally to Zurich, Switzerland, to Germany, Frankfurt, within the African context to Kenya, and on the back of my 15 years working experience in corporate South Africa, and half of those 15 years having served at the London Agricultural Bank as the executive manager responsible for risk mitigating solutions within the insurance division. That experience, that qualification, supports the formulation of Agri Seed Capital, and it was the birth to its conceptualization because the business exists to solve the problem of financial inclusion. I'll then jump into my presentation, Chair, and speak about the services that we offer. So we're a finance institution that is fully Black owned and fully Black managed. We provide what we term integrated solutions to the sector. And those solutions are production credit. Over and above production credit, we provide what is referred to as credit-linked crop insurance, which is making sure that the credit that we disperse is adequately protected against elements of weather, climate risk, and it's climate change resilient and climate change proof. We then provide what I would term as non-financial services, which is providing market access to farmers. Over and above providing market access, we have a dedicated finance and accounting team that helps the farmers that have been onboarded generate their own set of financial statements. And those 4 service propositions, which are scalable service propositions, address multiple issues within the sector. They address the issue of being able to secure appropriate finance. They address the issue of risk protection by having appropriate crop insurance. And they address the perennial issues about farmers not having financial statements, in that we help structure and model the businesses as economic units with their own credit profile and with their own financial statements, over and above that facilitating access to markets to make sure that they're able to get the right price for their produce. As I mentioned, that our problem is to solve the issue of financial inclusion. According to a World Bank study that was done, South Africa has about 250,000 to 400,000 smallholder farmers. And the term smallholder farmers would mean that those farmers that produce at a profit and supply excess produce to markets. And that's the particular segment that we focus on. Outside of that smallholder farmer segment would lie over 1 million subsistence farmers. And these are farmers that are classified as making revenue of less than 50,000 a month. 50,000 a year, I beg your pardon. And there would be another segment of commercial farmers, which is about 40,000 commercial farmers that contribute to 90% of South Africa's food production. Now, within the area where we focus on, the 250,000 to 400,000, that we classify as the missing middle. Access to credit is said to be at 12%. Access to appropriate agricultural insurance for risk mitigation solution is said to be at 1%. So it's very clear from the statistics that there is a gap in this particular segment, and that's a gap that we've organized ourselves as a business to address through our business model of integrated services. And the services are integrated because all of them are interlinked. And that is where traditionally financing models have failed for the agricultural sector. Because you generally get a financier that's providing credit, but the credit is not supported by insurance. Or you find a financier or an insurer that provides insurance, but it is not supported by credit. And you find institutions that provide both, but it's not overlaid by market access. So we solve our problem through an integrated approach. I'll then focus a bit more on our target segment, just to zoom in on the profile of our client. So our typical client makes annual revenue of between 50 million and 1 million. That would fall under the definition of a smallholder farmer. They're typically beneficiaries of land reform, historically disadvantaged individuals with a leaning towards youth and women in our portfolio. And we focus on specific commodities, and there's a reason why we focus on those commodities. 4 primary commodities, which is maize, soya, dry beans, and sunflower. And the reason for that is the Department of Agriculture unequivocally classifies maize as the most important grain crop in South Africa. It's a crop that is multidisciplinary in use, not only used for human consumption, but also used for animal consumption. Interestingly, it is also used in the manufacturing sector as a byproduct to aspects such as glue, paint, and so forth. So it's got various backward and forward linkages into the economy. It's also a staple food in the country and a measure of food security and food stability. So our bias and leaning is to make sure that we focus on those high value commodities that are labor intensive in their nature, aligning with the medium term development plan and aligning with CEDFA's strategic framework from 2025 to 2030, and also aligning with the Department of Small Business Enterprise to have a sectoral focus particularly on the agricultural sector, which is labor intensive in nature, and to look at those commodities that are high value and export orientated to support the rapid scaling and creation of employment in the country. We've expanded our reach and we operate in 5 provinces, which is the Free State, Gauteng, Limpopo, Mpumalanga, and Northwest. What we then define on the next slide as our target operating model, which basically sets out how we go about achieving our mission and our vision, is that we see ourselves as a linkage between private capital and public capital. So we drive a public-private partnership model where we aim to raise capital efficiently and on land responsibly to the agricultural sector. So CEDFA is not only the partner that we look at in terms of capital raising, but they are our primary partner in supporting our initiatives, and our vision is to crowd in more capital from the public sector to make the cost of lending more affordable. So our target operating model is premised on 3 pillars. 1, which is capital mobilization, 2, which is our product and value proposition, and 3, which is our impact outcomes. From a capital positioning, we have an on-lending facility to the tune of 15 million with CEDFA that started in September 2022, and we use that on-lending facility to support smallholder farmers in their production. Because it is not only capital intensive to produce in the agricultural sector, but also labor intensive. And on the capital side, there's various inputs that are required during a production season, which typically takes 8 months from the day of planting till the date of harvesting. So we make sure that we provide seasonal input loans We provide input financing, which is for seeds, for fertilizer, for diesel, and for equipment hire, to be able to make sure that a farmer can go from 30 hectares to 100 hectares of production. And to contextualize that statement, I was speaking to a commercial farmer, and the commercial farmer was quite clear and unequivocal to say, if you are operating in the grain production cycle and you are planting less than 200 hectares, then you are not profitable, you are not sustainable, and you are not scalable. So it means that different models are required that have a capital orientation towards them to make sure that we achieve the economic impact, the social economic impact, and the environmental impact. Through the work that we've done with SEEDFA over the last 3 years, we've been able to finance over 100 such farmers. 35% of them have been women, 65% of them are youth, 2% are persons with disabilities, and 99% of our portfolio are black farmers. Now, the developmental impact over the years, on average, we disperse around 200,000 per farmer per cycle, which is the 8-month cycle that I referred to. To date, our current loan book as is 8 million rand, and we have approved another 7 million rand for disbursement going into the summer planting cycle, because agriculture is time sensitive and the crops need to be produced at a certain time. Now, as we enter September and October, that's the planting season. Now, per cycle, we're able to generate about 200 seasonal jobs from the farmers that we fund. And the trend that we have seen is that at least over the last 3 years, each of the farmers in our portfolio have been able to grow their revenue, the total turnover, by more than 30%. Our client engagement model in terms of how we find and interact with these farmers is through provincial departments of agriculture, is through organized agricultural groupings, unions and associations, and it is through our own forum that we've established, which we refer to as the Flourish Forum, that we hold on a quarterly basis, where we invite farmers planting the grains that we target, we invite commercial farmers, and we invite agri-cooperatives as a network session for them to be able to share information, link with each other, exchange shared experiences, leverage of each other's resources, and in that particular environment, we also are able to then get our pipeline of clients. Now, the sector has a number of challenges, and those number of challenges also present opportunities. Number one, the issue is access to affordable financing, and that is the bridge that we're closing with our PPP model, which is our private partnership model, capital from government and also capital from the private sector, to be able to achieve an agile and scalable alternative lending model. What we tend to see is that infrastructure remains a significant problem within the sector. And by infrastructure in particular, I'm referring to irrigation systems, which are prohibitively expensive, but with appropriate irrigation, farmers can easily double their yield because they can control the water source. So the infrastructure challenge remains a significant challenge in the sector. And the perennial challenge is being exposed to climate risk and climate change, for which we are mitigating for by appropriate insurance solutions that are embedded into our lending. So I'm going to share 1 or 2 success stories and 1 or 2 setback stories, and I'll start with the first one, which is a farmer within our portfolio, a 33-year-old farmer, Lerato Sinafomo, in the Niger region. She has received and is a beneficiary of land reform, access to 400 hectares, where she's planting and operating a mixed farming operation, maize, soybean, and raises cattle and sheep. We have been financing the operation for the last 3 years, and what we've seen over the last 3 years is that she has gone from 100 hectares to 180 hectares, which represents an 80% growth. And our target going into this next season, which is September and October, is to make sure that she plants 300 hectares, which would be a 65% growth from what she had planted previously. But this journey has not been without challenges. There has been droughts in 2023, particularly January and February, where we had a midsummer drought in 2023, and very heavy rain around 2024. So farmers generally move from extreme weather patterns. And within our portfolio, we look at ourselves as efficient risk managers that walk the journey with the farmer and at every point in the cycle find different risk mitigating solutions to address their needs. From a setback point of view, I'll refer to a farmer that we have in our portfolio, Mr. Reginald Glata, who's in the northwest. Also suffered severe and critical drought. Projected income prior to the drought would have been 600,000 for that particular season, but because of the drought, the income was reduced to 15,000 rand, almost a total and 100% loss on their production. And together with SEEDFA, we're working on structuring a solution to make sure that that farmer can go back into productive use and producing and participating meaningfully in South Africa's economy. So what are our growth enablers, and what does the portfolio look like, and what do we want to achieve with the support of SEEDFA? Number one, it's very clear that the sector is very capital intensive. From a microfinancing perspective, which is financing up to 250,000 rand, that we can close production gaps, but we can't finance the whole cycle. So the next level of our business is to make sure that we transition and we move into a wholesale financing product that can finance farmers at a higher level, those that demand more than 250,000. And from the work that we've done, a number of farmers have graduated from our microfinancing facility, and we're in the process of unlocking more capital for them. Our target is to fund 500 farmers within the next 3 years, and it's to make sure that at least half of that 500 graduate into mainstream financing. And by mainstream financing, we mean that they can be able to raise capital from commercial banks. So we look at ourselves as a truly developmental institution that takes a farmer who did not have financials, did not have a credit record, did not have a production history, and work with their skill, their ability, and access to land to graduate them into an arena where they can be able to bank a 15, 20 million, 30 million facility from a commercial institution, allowing them to create employment and scale, and allowing them to really be able to participate meaningfully in the economy. So lastly, Chair, as I wrap up on my presentation, I'll focus on what the policy recommendations could be from a parliamentary perspective, in that it is very clear that climate risk has taken hold and farmers from 1 year move from extreme drought to extreme floods. Therefore, from a regional perspective, there needs to be a consideration of a climate risk pool that is going to support smallholder farmers against natural disasters. That is currently a significant gap within the country from a policy perspective, in that there is no national agricultural insurance framework similar to our counterparts within BRICS and similar to our counterparts within the rest of Africa, particularly Kenya, that are leading in the school of thought of providing credit guarantee, risk mitigating solutions against climate risk. And that will be able to unlock capital and allow more lenders to come into this particular space. Because we see the agricultural sector as the country as the sector that attracts the least credit than any other sector. So it points to the particular risks that surround the sector and the gaps when it comes to credit guarantees against climate risk to be able to unlock further financing for the 250,000 to the 400,000 farmers that I had mentioned. So to wrap up and in conclusion, my last remarks, Chair, would be the intersection then and the role that we play within SEEDFA as an indirect lending agency is to provide expert risk management in the sector at every key point, because farming is an extremely complex endeavor. And I think we oversimplify it by expecting a farmer to be a soil scientist, to be an accountant, to be an agronomist, to know all the different planting cycles, to know how to operate a tractor, to know how to operate a harvester, and on top of that, to know how to manage credit, insurance, and all the other aspects that allow an organization to scale into a commercial entity. So what we do through the support of the agency is walk the journey with specialized risk management services to make sure that we usher in a generation of new commercial farmers that will contribute to the food stability of this country. Thank you, Chair.
Thank you very much for the presentation, Agri Seed. We are now going to listen to the presentation of the Mali Africa. Over to you, sir.
So whilst Olivia is getting it there, allow me to start. So, Chair of the builders of Izimali, and I'll share you exactly how we got to where we are today. So very delighted in terms of where we are, in terms of the process we followed here. I'll just wait for the presentation to come up here. And I think whilst it is coming up, also just a big thank you to Olivia behind us, and also for setting us all up and getting us in front of everybody to come and present our companies today, which we are very delighted about here. Press enter. So it just lost the signal to the. We'll just wait for that to come up, everybody.
I will request that we continue
Sure,
because time is not on our side.
I'm happy with that. So with that said, and as it goes along, so we were extremely proud of our company, and we're delighted that where we are today, our business is now 5 years old, and I'll explain that also to everybody. So we are obviously a proudly South African company, and one of the biggest things for us is we're the first 51% black woman-owned company in South Africa in terms of asset-based rental company in South Africa. We started this business in the middle of COVID, and while we were all at home and everybody was, we weren't allowed to travel, we sat behind the scenes, we prepared the strategic direction of this company, and today we have been going for 5 years very successfully here. And the reason I only raised the 5 years is it's actually slightly more than that, because the companies that got together to create Izimali Africa, Trade and Finance Africa, we're actually about 15 years old already in terms of skill sets coming from the sectors that we do play in here. One of the big things for us is we are a rental asset-based finance company. And what that means is a rental asset-based finance of movable assets. We don't finance bricks and mortar, and we finance movable assets for anybody that's buying assets. So if you're in a world of looking to increase your business and you're looking for assets that are movable, and I'll share those assets with you, that's obviously where we play. And when I look at a room like this, and we were historically a government financier, and I'll also explain that to everybody. There it comes up now, thanks. We can just go to the second slide, thanks. Well, stay on that one. Stay on that one. Thanks. Thank you. So historically, as I said, we look at movable assets, and over this time, we have obviously financed quite a lot of customers in that process. Just the second slide. So let me just introduce you then to our board quickly. On the next slide. So my partner is a lady by the name of Toko Mogose and Watembe. Toko is an incredibly beautiful lady. She is the chair lady of the Katana Group, and the Katana Group in South Africa today employs between 12 to 14,000 people in her group. and she also sits on various boards in the country, and she's the chair of obviously Easy Mali. There's myself, I'm the CEO. I come out with a lot of experience in the asset-based finance world of South Africa, and I represented many of the banks at different levels and understand the level. We're delighted with the inclusion of Dr. Debang Mokoteli, who has joined us, also a stunning lady, and she is the CEO of NCOP Capital, but also she's a professor of finance at the Wits University here, and she just recently joined our board, which we're very delighted about. So let me just tell you about the milestones of where we are and what our business has done. I think one of the biggest things for us as a business, historically, we were a discounter of capital. And what I mean by that is when we discount to a bank, and all the banks in South Africa have discount divisions. In other words, the banks operate under installment sale agreements. We operate under the rental model in South Africa. So when you do installment sale finance, like you do in any bank when you go buy a car, in that process, we were discounting our paper to a bank, but the bank couldn't play in our areas that we played in terms of the rental model, because the banks aren't geared to play there. And in that sector right now, that's why they can't help, and they're not playing the right role they should be doing in the sectors that we do play in. One of the challenges we had is if we stayed in the discounted market and kept discounting a bank, if a bank closed those discounting markets down or their divisions down, we as a company would close our doors down, because clearly we're too reliant on them. So over the years, outside of our set for relationship, we are a big financier of government in South Africa. We were discounting our paper. In the last 2 or 3 years, we financed about 1.5 billion. Partners from the start, which we're delighted with. We did 2 drawdowns in the last 2-3 years. We did a 20 and a 30 million rand drawdown. In that time frame, we helped about 450 create some jobs. We helped about 250 SMMEs. But it's not just about helping 250 SMMEs. It's about helping their companies and where their companies go and how they grow those companies. Because we've been going since October and our period of repayment of that money back to SETFA, obviously those people are becoming repeat customers of ours. So they're coming back to us looking for more assets, and it's been actually quite an incredible journey with the SMEs that we do look after here. We have got a third tranche in. We did ask for much more money, but they're only just approving 25 million. Challenge for that is, and I'll tell you why it's a challenge, 25 million, what we've asked to do is take the number up from 250,000 to 1 million rand, and for one specific reason. If you become a plumber or you want to become an electrician, if you want to go buy a vehicle or bakkie out in the markets today, it is so expensive, guys. We can't, a young SME can't go out there, start his business, go buy a bakkie and give him 250,000, because one challenge they have is you're going to end up buying a used bakkie. Those things are 3-4 years old. They've got 80,000 kilometers on. It's going to spend more time in the workshop than actually going out to do the job to generate revenue. So we've asked to push up to 1 million rand, which has all been approved. And I'll tell you what also is because a lot of youngsters are coming out in the medical field in South Africa. They come out, they want to open a practice, they're a dentist, they're a doctor. 250,000 not going to buy your dentist machine. Those machines are exceptionally expensive, but at 1 million rand we allow somebody obviously to open up a practice shop. So very excited about that. One of the big things for us, I spoke about the assets we finance, and if you look at under point number 4 there, and when I refer to ICT and medical equipment, ICT being all IT equipment, again inside the room here, we do the servers, we do the video machines, we do all assets inside here that are movable assets, and we even finance what sits inside many companies like this. Obviously commercial vehicles, a lot of commercial vehicles, there's a lot of owner-driver schemes, guys are driving their own trucks, they've got the contract, but they don't know how to get the truck, and obviously 250,000 doesn't take us to that level. Medical equipment, commercial vehicles, yellow metal in the mining space, yellow metal in the construction space, we do that. Material handling, things like forklifts and all the different stuff, we do all that. Agriculture, industrial equipment, plus obviously a lot of solar, guys. We've all gone through the solar phase right now, of which we're helping the solar phase. The biggest thing for me on that slide is the bottom right-hand corner. Whether the customer pays us late and we collect late from a customer, which 99.9% doesn't happen, we make sure that our set for account is 100% always up to date. We are never in arrears, and we will never be in arrears, and we operate that account accordingly. And we've been very blessed to be able to do that, and obviously just moving forward. So on the next slide, so how do we secure these funds, and what do we have to do? The biggest thing for us guys in our business is our time to market. We're much faster to market than anybody in South Africa, and I'll tell you why I say that. When you go into a commercial bank today, and I come out of a bank, I've been CEO of banks and I've been CEO of asset-based finance divisions, the process is a long process for a person to get credit. And if you're a young SME coming out to start up, and I say it with all the respect in the world, you're not going to get to the front door of a bank, and that to me scares me. And that's why companies like ourselves can help those sectors out there. So we foster to market. You go today, one of the challenges you can't do, and I do see it in some of the government departments today, you go lend 250,000 Rand, it shouldn't take you 20 months to 24 months to get 250,000 Rand. You come into our company with the same credit stuff, run through the credit process, I'm going to give you an answer in less than 24 hours. You'll have your asset, you'll go make sure you go do your work out there, and obviously get the job done, understand. So one of the biggest things now in terms of the supply network, when I talk supply, it's everybody that supplies the assets. So somebody that supplies a motor car, that supplies yellow metal, that supplies whatever. We have about 150 years experience in our business. Obviously, my young age, I have 40 years experience. We know the supply market exceptionally well in this country. So when you get onboarded with Izimali and come into our world, you sign a supply agreement with us, we credit vet you. And there's a reason why we credit vet you before you come into our world. If we don't credit vet you, a supply can't run without a financier behind them, because then they can't sell their product. So once you credit vet you and become accredited with us as Izimali, we also make sure that the SME we fund is also linked to the supplier. So that relationship is very, very strong to make sure that the SME is looked after through the period of his contract. And depends obviously again on the asset that you do buy. One of the big things also in our world, we sign up everything electronic, so there's no paper flow, it's all electronically done. And the last point on that slide, which is the big point, as we borrow money out to customers, as we collect every single month, we redeploy the money back in. We just keep turning the money all the time so we can help more and more SMEs. We don't take dividends, we don't take profits out of it. We redeploy, obviously there's small salaries we pay. We're a small team of 15 people, and we get the job done through the capital. And again, I'll explain that right now. So money's redeployed back into the system, and once it's back in the system, we redeploy. So if I get 100 million, hypothetically, I can turn that into about 200, 250 million over time as we go along here. So again, the biggest thing for us is our reliance on Setfer. The challenge we have now is, and it's a massive challenge, is once the capital runs out, what happens? We started a market, we started a process, capital runs out, our market stops. When we got the first 50 million Rand, we deployed that over time. The next 25 now, I can tell you right now, we'll deploy that in 3 months. What happens in 3 months' time? And I'll explain also in terms of the other capital, we've had to go look at how we raise and how we play in our space. Just the next slide, thanks, Olivia. So if one has a look in terms of what sets us up and what we look for, I use the example, and it's nice to hear some examples that were shared right now. I take Galita's Chicken, for example. Nice little business, Galita's Chicken, got the franchisee and the franchisor. But the franchisee out there, they're at a hell of a risk, because one of the biggest things is you are paying, it's a cash business. So once you pay a lot of cash, there's a lot of cash through the counters. So there's a lot of risk. You know, people come rob you, steal your money, all the good stuff. We took in drop safes, as you've heard, bank drop safes. We finance all the drop safes for the Galitos to make sure that the funds are secured, goes into a drop safe. And obviously when the fidelity guards pick up the money, money goes back in the bank account. It's all done safely here. We lock in the supplier, and once again, I talk supply here. There's many suppliers that we have funded that need funding for their end customers. So we have a couple, and I'll share a couple of those right now. And we look at how we enhance this the business, not just about giving them 250,000 or $1 million Rand. It's how we take their business to the next level in terms of the focus. And we create a one-stop shop. In our world, we look at the asset type the customer's buying. We can't tell the customer what asset to buy, because once again, that's his decision. For one reason, if the asset doesn't work, you can't blame us as Izimali. But we recommend where to go. We recommend where to go in terms of our top suppliers. We then obviously then do the finance, and right now we also do the insurance. So there's 2 ways you look at the insurance. Either he has his own insurance, which means he notes our interest on the policy, so our assets covered, so our fund is always covered. And more importantly, sometimes we do our own insurance because we own our own insurance company. We've created our own insurance business that sits inside Izimali as a separate company, and as the assets come off, the customer's rental he pays every month, incorporates the insurance every single month, so he knows those assets are covered here. And obviously the big thing for us also through the maintenance suppliers, that through the supplier, there's a service and maintenance agreement, so there's always those agreements to help the supplier, or the SME, sorry, should those assets go wrong. In terms of LTV, we refer to LTV, loan to value. How much do we borrow a customer? Sometimes if it's buying new assets, we borrow 100% to that customer. We borrow 100% to the customer, and secondly, we obviously, if it's doing a sale and leaseback, we then do about 75% in the customer. Just moving on to the next slide quickly. We just want to bring attention to some of our customers. We've got some incredible customers. Manati Coffee, the big thing for us, Mia, on that slide is we look forward to growing ever further with their continued support. And if we look at the next customer, which is Fuza Pharmacy, what I like is their dedication to small business is truly inspiring, and we obviously like that job. Just the next slide again. We got some testimonials from our customers. We're doing an incredible job, and these are customers that we help service their customers. So just keep that in mind, okay? Just the last two slides, because I know because of time. Our marketing campaign is very aggressive. So if you go into our LinkedIn and our Facebook pages right now, our marketing is very aggressive. You can see our branding. So once you go into LinkedIn, go under Finance Africa, you'll see us over there. We have a massive drive that starts in another 7 days' time. The customers want to know who the staff are, so we have a drive now that drives obviously the individual people behind the scenes, and obviously I've done a couple of videos plus in terms of where we are here. So massive drive in our marketing, very blessed here. So just to close off, and again I know time here. So Finance Africa, guys, we aim to facilitate the growth of the public sector and private sector in South Africa. In terms of our world as a company, we're very proud of our association with SETFA. The challenge we do have, we have raised capital somewhere else. And in that capital that we have raised, we have a prudential limit of 20 million a customer. We've taken customers to 20 million rand, but we want to spread that quite a lot. That capital is also about to roll out now. It was just under half a billion. We were given 24 months to move that money. In 12 months, the money's gone. Well, actually in 10 months. So our challenge now in the next 60 days or 90 days, once all our capital is deployed, we can't stop the customer base we have in terms of where we're looking right now. We're looking at flexibility in terms of how we do this. I heard the DG raise a point about cooler funding. We can use the cooler funding, go to bank, we can leverage against that. How that comes, we can have that discussion also. And we're just looking at some creative ways of how, through the government departments, we can raise much more capital. I think just to close off again, thanks everybody. I think we've done a great job as a business thus far. We've got a long way to go. There's so many people that need help. The banks are struggling. I say it with respect, not because I'm sitting here. I come out of that environment. We can't post stuff and don't get it done. So we're looking at a full blend of finance. We don't just want to do the asset-based finance. We want to do the invoice discounting. We want to do the purchase order finance. Customer comes along with a contract now in the mining sector. He's got a purchase order finance. He can't wait 30, 60, 90 days to get 250,000 rand to deliver because he'll lose that contract. Understand? So again, thanks everybody. Thanks for the capital we have received. And I hope that through the committee today, you see the opportunity with our company and obviously all the other partners that are here also, how we can raise more capital quickly. It mustn't take a year or 2 or 3 to get it approved here. So thanks everybody for their time. Thank you.
Thank you very much for the presentation from Zamali Africa. We are now going to listen to Nala Finance Loans. Over to Nala.
Thank you, Chairperson. My name is Tabiso Mokotla. I'm the Managing Director of Nala Finance. I just wanted to start by saying that I come from the rural area in Free State, in Kwakwa, former homeland. I was an internal auditor for municipality for the past 17 years. Working as an internal auditor, then I then went to open the company, this company Nala Finance with my colleagues, 2 of the ladies that we're working with. And then I wanted to start by saying, Chairperson, that we welcome the invite that you sent to us. Thank you very much, Chairperson of the committees, members of the Portfolio Committee, Director General, Deputy Director General, the Chairperson of the sector representatives, acting CEO, and all were protocol observed. Can you just start by?
You can just go down. Where's your arrows?
Okay, now here it is. As you can see, the members of the committee, here is the real Table Mountain. That's where I come from. So we are based in Free State, and we do funding for the small businesses. And after we've done that small businesses funding to hawkers, sometimes to hawkers, and we also do the funding to. I'm not sure if I can speak a bit of a Sotho somewhere at some point. Chairperson.
Brother,
Yes,
Sesotho is one of
because
our
I
official
just
language.
wanted you to feel my heart. That's why I'm a bit nervous. But in any case, I'll continue. So we are basically a small team of people of about 7 people, and we were then be able to apply for funding from CIFA. Then CIFA approved us for the 15 million rand that we got last year. But the first tranche of the money came in March this year. So the first tranche of the money that came in this year is about 3 million rand, Chairperson. So that 3 million rand is already been dispersed to all small businesses. The small businesses that I'm referring to, Chairperson, it's hawkers, the backyard mechanics, your hawkers that comes to us to borrow for money. Yes.
I just want to see if I can go full screen for you, but I don't.
Yeah, can you just go?
Can you
full
do it?
screen? I don't know. The one that you had should have been showing.
No, I don't. Just keep going.
You can go to full screen, but it's fine. Then I'll continue. So we are based in rural area in Free State. Our access finance for small businesses growth national. We provide affordable loans ranging from 3,000 to 30,000 rand with flexible terms, helping small women, youth, and entrepreneurs with disabilities. Grow small businesses such as hawkers, saloons, and car washes. As we are a registered service provider of NCR, and we are in the process of acquiring FSP license number. We are committed to creating an inclusive financial culture that champions the opportunities, support livelihood, and drives rural properties. This is where we started from. In 2023-22, we were only 4, myself and 3 ladies. After the CIFA has funded us, we managed to hire this number of people, as you can see there on the flight. So we then received an approval from CIFA for 15 million rand, and the first tranche of the money came in March this year of about 3 million rand, which we already deployed to all the small businesses that we came to us and asked for a loan. I must also mention to the committee that these people that came to us, much of them do not have capital. All they come to us. Some of them are already trading, and all they came to us for is for a capital fund. Sometimes some of them are already in business. So we do what we then call due diligence to them. So to date, like I said, we have about 1,000, close to 1,200, 1,200 people that are waiting for us to give them money. We call them the pipeline businesses. So, our first row of the 3 million rand that we got in March, we managed to help about 263 small businesses, supported by that loan. On a loan average of about 11,000 rand per business. Currently, Nala Finance has about 1,800 clients waiting to be funded. As you can see there, these are the people that we have already funded. I must also make it clear to the committee that some of the roads in Free State, part of the roads in Free State were taken over by Sanlam, by Sanral. Sanral, after taking over that, small companies or subcontractors were appointed by Sanral to help with the workway. As you can see there, they came us to get for, they came to us to apply for that bit of a loan, anything between 1,000 rand to 30,000 rand, so that they can be able to get and buy these materials. And the lady there, also, is the one that opened the business as well. She's training securities in Kwakwa, those who acquire certificates so that they can be able to work in security companies or open their own securities. And as also, we also have the people who are doing the installations, solar installations, who also came to us, and we managed to help them with that particular money that was given to us by SIFA. Our collection rate, it's not that much of, it's anything between, after we have given them money, they came back to us and asked for more. But we could not give them more than 30,000 rand based on our credit policy, which restricts us from giving them anything beyond 30,000 rand. But that also the board of directors, advisory board of the directors will look at it and will then advise or request from SIFA that we be given a latitude to give our clients anything between 0 up to 100,000 rand. This is our analysis for the collections and the money that we disbursed during the past 6 months from March until to date. So we generally give these kinds of loans to these customers, so that the first thing that we generally do is to make sure that these kind of businesses do exist, because some people will come and say, I sell fruit and veg somewhere, and they sometimes will not sell that, but we have to do due diligence, send the client or our consultant to confirm that they do have that kind of business in existence. This is our opening of the new branch after we have received money. As you can see, the people were queuing in our new branch, because we do have 2 branches. So this picture was taken immediately after we were given money by SETFA. So, I must also mention that to the committee that much of this loan that was given to us do help this kind of businesses. This guy came to us, as you can see here, that we do have Snacker Biscuit. That he had this oven before we could be able to manage and secure him this particular oven for him. I must mention to the committee that in Kwakwa we do have about 237 firms. About only 41 of them are occupied because of the unreliable electricity supply in our area. We do know that Malutopufu municipality is the biggest. They are the ones that are owing ESCOM about 8.1 billion rand. So the supply to electricity in that area, it's not reliable. As a result, there was what we then call a capital flight out of Kwakwa. That's why there's a very little number of firms that were occupied for any generation of employment in that area.
Okay. Close up now.
Yeah, I'm about to so I'm not gonna do. We also have the lady by the name of Diseba Muloisani, who came to us and asked for a sewing machine, which we bought for her, and then after we bought that particular sewing machine. She was just showing us some times ago that she has bought she's trying to build a house for herself, and her capital generation or revenue generation has increased. As you can see on the picture that she gave to us, this is what she sends to us after the loan was given to Disable. So in a nutshell, chairperson and members of the committee, we support these young people, we support women in particular, we support people with disabilities, and we are all fostering for growth and development in the Free State. And part of this, maybe chairperson and members of the committee must be are aware that Free State, especially in Kwakwa, we are number 6 in terms of mortality rate, purely because of poverty-related illnesses. So as a result, a bunch of this help that comes from government institutions such as SITFA do help us to resuscitate or rebuild the economy of the area. I'm not going to get to that. Yeah. So in a nutshell, chairperson and the members of the committee, I would really love to say that please hear my heart if my words fails me. I just wanted you to know that part of whatever this we got from CIFA as macro lenders or MFI do help us, because much of these businesses that we're helping here, banks they need an audited financial statement sometimes from them, which they cannot provide. Banks need bank accounts from them, which they cannot open. Some of them do not even have bank accounts. So we do help such kind of people who came to us, Abomama, Labomama, those who are selling vegetables, those who are selling fruits in the taxi ranks. We are helping those kinds of people. I would love to thank you very much.
Thank you very much. That was the presentation from Nala Finance. We are now going to listen to the National Stokvel Body of South Africa. Maybe you can come closer. Thank you.
Honorable Chairperson of the Portfolio Committee on Small Business Development, honorable members of the Portfolio Committee, Director General of Small Business Development and Deputy Director General, Chairperson of SIFTA, Board and CEO of SIFTA, all protocol observed. My name is Temba Mate. I'm the Executive Chairman of NSPSA. We've got our head office in Parktown in Johannesburg, but we've got our big operations down in KZN, where I come from. We've got an office in the central district of Richards Bay, old ABSA building, where we've got a big operation there. With me is the project manager, Kodani Matthews, who's really driving, who's on the ground on a daily basis. All right, so the things that we are going to cover, it's our background, primary objectives, and then the program that we're using to drive this program, the funding that we got from SIFTA, lending methodology, we're going to talk to that, the status update, and our team who are really making things happen, and then the team profiles, technology, partners, and then we'll end there. So NSPSA is a registered not-for-profit company in terms of the Companies Act, and we are also approved by the National Credit Regulator. We've got a board of mixed skills, people that have been exposed to mainly to financial sector, from commercial banking, investment banking. Some of us have been in Development Finance Corporation. I spent 30 years in banking myself. I've headed ABSA in provinces in Mpumalanga and KwaZulu-Natal. In 2022, NSPSA adopted a new organizational strategy away from compliance, because when we created NSPSA, we wanted to assist our stockfiles to harness their buying power so that they can be able to influence the direction of the economy. But we are approved by Reserve Bank to do that, and it was very onerous in terms of regulations that we have to abide to. And then the banks were resisting, and they had that feeling that you might be stealing their customers. I think this triangle just shows where our focus, 65% of our focus is on provision of financial products to stockfiles through partnerships. And then the YES program that we are talking about here, the VEST program, is just focusing on that. And up to that, the middle part, just go back. The middle part is just, it's still work that you do for stockfiles. And then the 15% at the top there is the one that we assist them in terms of restoration and regulations. And then this is our key program that we are using to drive the development finance to the micro. Our focus is micro, the people that really won't be able to walk into the bank and get a loan. Fortunately, I've been in development finance. I've seen how those people are neglected. Although the policy says they must be assisted, but when they walk into our branches, people felt that, to do a loan of 1,000 rand is onerous compared to 100,000 rand loan. So they say, if I've got a target of 5 million per annum, how many 1,000 rands must I do to achieve the 5 million? So they tend to focus on bigger quantums, and then they neglect. But this is where the problem is. These are the people that really need finance, because once you give them 1,000 rand, you can see how they turn this thing around to feed the family and to also assist other people. So our model, so we do enterprise funding. We lend from 1,000 rand to 3,000 rand. Most of our clients are sitting at 3,000 rand, but I'll show that later. So phase one, program participants are required to first form a group of 5 people. So I think it's the same model that most of us are using here. It's based on the Crimean model. Groups are then allocated a center. Center is made up of 5 groups. Then participants attend business workshops, training to identify business and growth opportunities. I think for us this is very important, because we can't just throw the money to them. We need to ensure that before they start using the money, they know all their responsibilities, and we are fully aware of what they're going to be using the money for. So thereafter, the participants submit loan applications to fund the above identified opportunities to group and center. And then the loan we do directly to the group. So within the group, there's a chairman. We don't give to individual in the group, we give it to the chairman. The reason for that, I think we spoke about earlier, it's about that peer pressure, that if someone fails to repay the loan within the group, it's not us that will be directing our complaints to that person. It will be to the group, so that they should be able to cover the loan. They push that person to pay back the money. And then our phase 2 is where they set up businesses, then they start loan repayment. We hold regular group meetings to discuss members' progress and loan repayments. And then our team, they go out to them, and they attend coaching and mentorship programs, which is very important. That once you've given the money, we need to also to follow to ensure that people understand their responsibility, and then we ensure that the money is working, and then they are making the money. So One thing that I must also mention, our focus is not only to those people who are starting up businesses. We are also looking at people who have been operating, but who want to go to the next level. Let's say a person has been like sewing pinafores. Now they want to design, they've learned, they want to start doing clothes and dresses that are at the high level. We assist them to get the right machine. There's a lady in Rogers Bay who was telling us she needs to buy an embroidery machine, which is about 15,000 rand. But at the moment, we can't assist that because we've got the threshold of the maximum of 3,000 that we can lend to them. So interest rate that we charge is in accordance with the NCR. Our interest rate is charged and is limited to the NCA. All other benefits like training, coaching, mentoring are rendered free of charge, so we don't charge for those. Program resumed on the 1st of April 2025 with 1,000 loans issued to date. So when we got the money, we hit the ground running and we started dispersing. As I said earlier on, average loan term is 3 to 6 months. Loan option 1,000 for the first-time borrowers, but for the first tranche that we've received, so we are going to be restricting to 3,000 rand. We also really want to create, the credible target market, so that when we lend the money, when we ask to increase the threshold, we are very sure that now they know the business, they can be trusted, they've learned how to repay, and then we are comfortable with the character, because that's very important in this particular market where there's no collateral. Average participant is typically rural women. You'll see the majority of our clients are women, because in those areas that we're dealing with, they are the household, the head households, and then they're the ones that are responsible for family sustainability. Business typically support formed through this program includes street vendors, vegetable and fruit vendors, clothing street vendors, etc., and then mobile kitchen vendors, and people that are making blocks in rural areas. Current SIFTA funding that has been approved is 15 million, and then they dispersed. They gave us the first tranche was 4 million, which we've dispersed just over 3 million. This is our team. As I said, the project manager at the top there is Golan Matthews. I think the photo there shows the team. If you look at them, most of these people, they've got degrees. They've got a hell of experience. Some of them, they've been with Unilever, senior marketing managers. We are lucky that we end up getting people. If you sit in the meeting, we can feel that we've got a team that is able to drive. They understand development, they understand what needs to be done, and they're hitting the ground running. And handling Amakosi and the councillors, we need people who are quite matured, not people who are still very young. If you look at the team also, you see that the majority of them, it's women. Some of them are not here. This is just the senior team. We are very cautious, not just to keep on hiring people. We need to ensure that our costs are well managed, so that we are able to, most of the money that we receive, it must go back to the people that we are financing. Technology, we are in partnership with the owner of an app called Stockfella. It's an app, it's called Stockfella app, which is assisting us on the Stockfella side. And then we've developed our in-house loan management system, which is really getting where we want it to be, to ensure that we are able to manage the risk. Because at the end of the day, the program success will depend on how good are we in collecting the money that we have dispersed. We've got automated reminder system, which just shows us people, if a person hasn't paid, we should be able to get to that person as quick as possible. Like these big companies, if you don't pay your loan today, the following day you get a call to say that you are in arrears. So that's what we need to ensure that we are able, because if you leave that money for too long, that person just forgets about you and then attend to those people that are really bothering them in repayment. But so far, I think with the relationships, we are getting a very good repayment pattern, and people are honest. Dealing with women, and mostly from rural areas, at the bottom of the pyramid, I think that's where you can see people that we still have hope in South Africa. We've got partnerships, mainly through our office in Richards Bay. It was in a municipality. They are willing, they are even willing to give us space within the LED offices. They say if you can deploy a person here, we would really like to do that because we can see that we're adding value. With Amakosi in the area, also traditional council offices, they want us to come in there to deploy people. So our model, we said we're not going to be like looking for office space. We're going to partner, and because when we go, they won't be paying rent. So it will be like we are adding value, and then they're getting some value from us. Okay. And then if you look at our loan amount analysis, the majority of our funds, they go to, they're up to 3,000 Rand, it's 61%. And then 2,500 Rand is 19%, 2,000 Rand is 6%, and 1,500 is 4%, and 10% for those who are taking 1,000 Rand. But you can see that the 3,000 Rand, which is the upper end of it, people are pushing, they want more. But we said at this moment, as we are really building them, let's just restrict it to that until we are comfortable, because they are in our database. As they grow, we will go back to them. June, 472,000, and July, 743,000, and August, which was one of our busiest months, was 1,590,500 Rand. The total amount that we've dispersed is about 3,070,000. And then our staff complement, we started with 4 people. We are now at 14 people. We've only had 2 people that we had to release because of dishonesty. I think in this market, you really want people that you can trust, because once you destroy the trust between yourself and the community or community leaders, then you've lost that market. You lose your brand credibility. And by gender, 94% of the people that we financed is women, and then 6% is men. And then our testimonials, we've got these 2 testimonials, is 2 ladies, one in Calfontein, in Gauteng, they're selling clothes. We gave the lady 3,000 Rand loan to improve the business. The impact is that she was able to attract new customers, and all customers came back who had already left, and then it changed the livelihood and improved businesses. These people, when they don't have money, you know, the only way that they can survive is to go to Mashonisa. And then if they go to Mashonisa, then that's the end of the business, because, you know, you can't repay the Mashonisa. So I think the impact that this finance from SIFTA is assisting, it will really pull these people back from those flows of Mashonisa. If the interest rate of 30%, if you take 1,000 Rand from the Mashonisa, at the end of the month you must pay the 1,000 Rand plus 300 Rand. It's unsustainable. The second one is Itzako Gail Mabasa from Bara, Soweto. Also, we gave the maximum, which is 3,000 Rand, and then we are still had to grow the business. He says, assisted with getting more new stock, which grew customer base. So with just 3,000 Rand was able to get more customers. So you can see the impact of what this funding is doing. Yeah, I think that's all from the Chair. Thank you very much.
Thank you very much. Let me take this opportunity and thank all the presenters for the presentation. Honorable members, it is now our time for interrogation. We are going to deliberate, and thereafter we give the recommendations and way forward. Can I see by a show of hand? Honorable Matulalo, Honorable Carol, Honorable Matsolo, Honorable Webster, Honorable Sapo, and then Honorable Chris will be the last one. So I'm sure all of us are looking at the time. I'm not going to say you speak 2 minutes or 1 minute. Just do justice to our time. Thank you. Over to you, Honorable Matulu. Okay.
Okay. No, Chair, I just want to check if we are on the same page. Earlier on, I've made the recommendation that at least one of us, one member must be allocated 15 minutes to do the interchange with intermediaries. Now, I want to check, Chair, if we're still going to take that approach, because we would like to have answers as we engage them than to throw questions in one basket.
I'm going to allow the honorable members to throw that, because we have 5 presenters, 1, 2, 3, 4, 5, so that they do justice to their questions, and then thereafter we'll allow them to then respond. If I can say I allocate 5 minutes or 10 minutes, I don't want us to end up like robbing the other one. So the only thing that I can request of the members is that you check on your time, and then you allow them to come and respond. If you take all of your time, 2 o'clock we'll be going to the plenary. We'll be starting with the plenary actually. Honorable Matulelo?
No, Chair, thank you. I just wanted to indicate that usually when committees are still continuing, because this is a very critical matter, we can't say be having some pressing plenary. Yes, we have to attend plenary, but we can put an apology and say we are still continuing with the portfolio committee. Number 2, we need to interrogate. If ever we are using that method of asking questions and then they come and answer, we are subjected to the normal issue that we raised in our last meeting, that people, they tend to answer in whatever thing that they want. They don't answer to all our questions. So I will go straight to the Pagamani before I continue. Okay.
I request that we go straight to our questions, because now we are taking another time, and some of the members are going to ask questions, so we cannot delay the plenary.
Do we agree that when I ask Pagamani, they must answer to me? Because if ever we all ask questions, then they come and answer, that will be the futile exercise of bringing them here, because they will answer on what they think, and you can't do anything about that.
So I'll request that you ask all of your questions, they will note them down, and then they will respond. If they did not touch on your response there and there, you'll then remind them. Otherwise, we're not going to finish. Honorable Sapo?
Yes, Chair. I don't think, Chair, I agree with your approach. I agree with what Honorable Matulela is raising. Can we be allowed to ask questions and receive answers, but taking into consideration that an honorable member has 15 minutes to do that? Because if you are saying we are going to put all questions in one basket, I think, Chair, we're going to have a problem.
So I don't know if ever the honorable members agree with the 15 minutes on all their questions. Honorable Malimachi.
No, thanks, Chair. I don't think it's much of a problem. I checked, if all of us, we take the 15 minutes, we need 1.5 hours, which is still allows us to can also go there. So it means what we need to do. Let's allow this process of interrogating, but as long as within your 15 minutes, you'll see how to do it. Then you will be assisted in terms of time. Whoever's keeping, then we stick there, we can finish it, Chair.
Okay, and what if the honorable member will say 15 minutes was not enough for me? I'm sure honorable members are not going to fight.
Chair, follow up on that. Since when it becomes a committee agreement, you will be protected by us. There's no way, whether it's still nice to integrate them, you'll just raise your hands and Mr. Malemaja, your time is up.
Honorable members, are we agreeing? I want us to agree before we start. Honorable Matulelo?
Thank you, Chair. We do agree because this is the approach we agreed on our last meeting, that the accountability meetings should be treated in such a way of interrogation.
I'm checking if we are agreeing with the 15 minutes.
No, I don't have a problem with the time.
Honorable Sap will be our timekeeper. Thank you very much. Yeah, this one is fighting. Oh, it's fine, it's fine. We'll take care of the time. Maybe we will be lenient to the honorable members because we'll be the ones who are working all the time.
I'll do it, Chair.
Oh, okay, okay. Honorable Matulala? Okay, this is going to be the standard. In all our meetings, we must keep on the time. We are starting from today, Honorable Matulala.
As long as we are going to always have 15 minutes.
Over to you, ma'am. Over to you.
Thank you very much, Chairperson. Firstly, let me go straight to Pagamani. The oversight visit to Pagamani Foundation project revealed the failures of its steadfast wholesale lending approach. And what was presented on the committee once again confirms that the program has a little developmental impact and add an unnecessary cost for survivalist entrepreneurs and entrenches a cycle of dependency on loans rather than building a sustainable livelihood. Pagamani, Mrs. Mapula Grace Mnisi received 10 loans since 2021, yet the committee was shown only 3 check-ins, highlighting the absence of the meaningful growth despite a repeated borrowing. So I would like you to answer on what was the motive behind showing us only 3, and also why we were disrespected there. I remember we were even told that government cannot provide. Today they are speaking nicely because they are in parliament and they are recorded, but that day they shown us a very middle finger, DG. We even told that the government doesn't know how to provide these services. That is why we always say that this outsourcing, we've got a problem with this outsourcing method of this department. So can Pagamani tell us the reason behind taking us to futile exercise and also disappearing in the process while we were there in the oversight? I'm waiting for an answer, Chair.
Chair, I think we need a direction. Is it how we have agreed to work? Yes. Okay, all right. All of these members who responded are Chris Malmaja, it's fine. Pagamani, over to you.
Honourable Chair, honourable members, DG, DDG and CEO. The client we visited was chosen by the Portfolio Committee. We had no decision in who we would take the client, the Portfolio Committee to. We received 5 clients on a list of clients that had, some of which had left Pagamani previously, and there was only 1 client left on that list, which was Mrs. Mnisi. The client we actually saw as played out was Mrs. Ngobeni, and the reason she only had 3 chickens is that she said she had sold out, and her previous chickens, many of them had died due to heat in the environment in which she operated.
But still, during the oversight, you seem to be, after we have visited the 1 client, you seem to have no interest of us taking us to other clients. As a result, in the spot, we use the parliamentary resources to go to oversight. But on the spot, we were only told, remember you have got 10 clients. You should have alerted us of the ones that were chosen by the committee, that all of them now that we have visited that one, and we saw the mismanagement of funds there, and then you are no longer having others. Why? Because at the spot you did not. Why you did not give us the ones that are available, because all of them, they were no longer available.
Thank you for your question. We prepared additional clients for that. Well, firstly, when we got the list, it was at short notice on the same day, within hours. I did respond saying that those clients weren't available. So that was done immediately. I have evidence on that on email if you need it. And we did offer to see additional clients in that area in both Matali and Zumeri, and we were told that that was not acceptable. We were being managed, and we were going to take you to clients that we had set up for the visit, and that you did not want to see any additional clients. So it was a joint decision. We didn't disappear.
Okay, thank you. For the last time, Pagamani, you admitted that you have got no obligation to coordinate with SEDFA when clients need training or non-financial support. This exposed the gap between the SEDFA's supposed developmental mandate and the transactional nature of its relationship with intermediaries. So Ms. Mnisi herself testified she was not aware of SEDFA's direct products, clear evidence of failure in outreach and integration. Do you still admit that you said you have got no obligations with the coordination of SEDFA, and as well as why are your clients, because you are receiving money from the department, why are your clients not aware about the direct similar assistance that you are giving to them? Why they are not aware that there is a department actually that they can assist them other than you? That was my last question for you.
Sorry, I don't recall saying that we didn't want to work with SEDFA in terms of training. It wasn't me. I'm not sure where you heard that. We absolutely do training in the field. We have a number of organizations that we work with in terms of funding, of which one is SEDFA, and we value that relationship. We do not lie to clients, but we don't tell our clients about any of our funding. And I'm not sure if any of my colleagues here will agree, but government funding is treated very differently by communities than commercial funding.
Okay, thank you. You can close your mic. I'm going straight to the Agri Seed Capital. It is clear, Chairperson, that Pagamani is not showing any remorse and is not ready to rectify all the mistakes, because I was reminding him about the incidents that happened in front of him. So out of the answers, I don't think we're getting help. At least the department is here. I don't think it's good to continue with such a client, DG. So let me go to Agri Seed Capital. The presentation of the Agri Seed Capital raises important questions about the state of agricultural finance in South Africa and the role of private sector in servicing smallholder farmers, while the initiatives highlights a real crisis. Exclusion of the majority of smallholders of the credit, insurance, and markets. So, the fact that only 12% of smallholder farmers have access to credit and less than 1% to insurance, it's an indictment of the government and its agencies, not a gap for private profiteers. Vile echaza apa ubutuba naye is qualified and other things, but as a qualified person, my brother, have you not seen any need to maybe if ever, is there any recommendation to yourself and the department in terms of them taking over to you, because your presentations are more of shining in the private sector. So rural farmers are systemically denied access to affordable finance, while state-backed intermediaries and private lenders move into profit from their vulnerability. So can you tell us, other than generating a profit out of these smallholder farmers, What else do you provide to the small emerging farmers? Else, and again, I did not hear you mentioning the very interesting part of the agriculture, that is cannabis. What are your provisions, or what have you done, or what is there in your programs that is focusing on cannabis farming?
Thank you very much, Honorable Member, and through you, Chairperson. The way that I look at the systematic issues around the agricultural sector is that they need new models, and government entities, in the way that they're set up and in their makeup, may not be able to respond in a very agile and adaptive manner. As the private sector, I think we play a key role in linking government programs and linking them with capital from large corporates, JSE listed companies and the likes. So my view is that it is not profiteering, but it is aggregating much needed capital to solve this problem of the 12% and to solve this problem of the 1%. So it is facilitating what government positions and champions as a public-private partnership model to be able to solve social issues. And that's exactly how Agri Seed Capital has positioned itself, as a social enterprise that is driving a model, and a model that is scalable, and a model that can be replicated indeed by government departments. So we look at ourselves as a trailblazer to uncover what a solution looks like. And that solution can then be replicated by the agency in scaling out the support, because there's only so much that we can do for this very large sector that we are servicing, which is the agricultural sector. Honorable Member, you mentioned the issue of cannabis and what we're doing in that particular segment. And it is quite an interesting segment because it is a high value crop, high value commodity that is used across multiple industries, similar to the grain that we currently finance. Cannabis is used for medicinal purposes, and I've seen some farmers use cannabis byproducts to be able to make clothes, similar to cotton, which I found quite interesting. At the moment, what we're doing is looking at conceptualizing what a financing model would look like. Because interestingly enough, each crop within the agricultural sector behaves differently. So the risk profile for maize will be completely different to a risk profile for sunflower, which will also be completely different to a risk profile for cannabis. But that is certainly an interesting avenue because our business model is premised on the high value crops with export potential, cannabis being one of them. And it then speaks to how the business would need to be capacitated in terms of capital and risk management abilities to be able to go into these various crops and commodities, because it's very clear that the need is there. The restriction would be access to available capital for us to disperse and on land reasonably within appropriate rates that are considered developmental. So the element of profit taking would be modest in its approach. Thank you, Chair.
Lastly, my brother, the Minister of Health did issue an instruction currently, I think, where the cannabis farmers were left in between and confused, where the instruction was saying all the products of cannabis, they must be taken off the shelves in every way. So I can hear that you are talking about the initial plans and everything that is possible, and you are even seconding my view about the cannabis. That is a very valuable commodity. So can you tell me then on that, what is then, how are you continuing with what you are telling us? How do you do that while the Minister of Health has issued that instructions? Lastly, maybe, I don't know if the department will talk after, but my question with them, why are you preferring to outsource such a very, very critical sector in the Department of Agriculture? Why not doing directly those services that are done by this entity. Thank you, my brother. You can wrap up.
Honorable Matulela, you have only 1 minute. I'm sure after the response, then we'll have to move to another member. If ever we're still doing well with time, then we'll come back to you. Sure.
Thank you very much, Chairperson. I think in relation to the commodities that we support, we intend to support them according to the legislative regulations of the country. So if there is any regulation that restricts cannabis products from being on the shelf, we would need to adhere to that in terms of how we structure our programs. So I just wanted to highlight that matter, Honorable Member, to say that in putting together our programs, we'll be sure to make sure that we adhere to what the legislation dictates. And as far as, maybe I would be jumping the gun by answering the question on behalf of the department, but I'll let the department come in terms of why such a critical service is outsourced. And I think it is primarily due to the manner in which we approach the problem. And there could be multiple aspects to approaching the problem, but one of the key things is that we approach it in terms of providing access to markets for the farmers. So we don't only give them the financing and make sure they have the right insurance, but we source the right markets for them. And we aggregate the produce into one and be able to supply into lucrative markets that will make sure that the farmers benefit by getting access to better pricing for their products. So it is holistic in nature, and it is that holistic approach that the department has entrusted us in being able to execute it. It also helps that from an experience perspective, having come from the private sector, the public sector, and the likes of the land bank, it gives Agri Seed Capital a vantage view to be able to seamlessly cross the bridge between what is happening in private and what is happening in public to be able to provide the right solutions, Chair.
Okay, thank you very much. Honorable Carol, your 15 minutes start now.
Thank you very much, Chairperson. I will make a question to the department, but they can answer in their closing statement. And I will make a remark to Pagamani. Number one, SEFA, SEFTA. Which entity among these entities create real sustainable jobs? SEFTA and partners use blended finances, mix of loans and grants. Is the money lent out totally 100%, or there are some that are receiving as grants here? And then to Pagamani. Pagamani is a straight out mashonisa. I am not even going to beat around the bush. You are giving consumer loans to disguised business people. They are not business people. They are using the money to build houses and buy cars and all those things. You could not provide evidence on the ground. We were there, we were with you, we spent a day with you. There was no evidence on the ground of any business. So Pagamani, with the money dispersed so far of 1.8 billion, you have no entrepreneurs on the ground. There's no businesses, which defeats the whole mandate of Small Business Department, which is to lend and coordinate efforts to promote the growth and sustainability of small businesses and cooperatives. You are not doing that. And the department will have to revise this plan they have with Pagamani, SIF, and all the other ones. You are just mashonisa, and it is what it is. You are not creating jobs. You are not creating businesses. And then my question to Agri Seed Capital will be, given that you receive a wholesale funding from SIFTA at prime less 1%, but do not disclose your retail interest rate to farmers, what is your actual markup and final effective interest rate charged to small holder farmers? How does this compare to microfinancing industry standards, where default rates can exceed over 20% in agricultural lending. I think you can answer that, Agri Seed, in the meantime.
Sorry, Carol, you don't want Pagamani to say anything. You're fine with them.
They had a chance, they never said anything. While we were with them at vendor, they didn't say.
Okay, I wanted to check that so that you don't skip them. Okay,
They had a chance, they didn't say anything.
all right, ma'am. Okay,
Thank you very much, Honorable Member. Lending from CIFA is indeed at prime less 1%. We include a 6% markup, which takes our lending to around 15–16% per production cycle. If one were to measure that against the national credit regulations in terms of the licensing and what we can charge, which is about 28–30%, we are actually charging about half of what the NCR allows us to charge. We have further recent developments restructured our facility with SITFA, where they have reduced our lending from primeless 1 to 5%. So it means that using that same logic of thinking, which is a 6% margin that we add, it would be that our lending will lend up at prime, around 10%. So the cost of lending out there at about 10% is probably one of the cheapest that you can get in the agricultural sector, looking at the risk that's associated with production.
Thank you very much. Izimali, your first black-owned company, yet we are addressed by a white male. There's no woman. You couldn't even bring one black woman. Are you just using these women as your mannequins, your barking, the display, or are they real women in this company? That is one thing I've noticed that is a red flag for me. But also you've reminded me of President Park Cho of South Korea. The economic plan started in 1962, where the government deliberately supported selected businesses and gave them guaranteed loans, preferred access to markets, export quotas and performances and all of that. And you had a good running, I must admit, for 5 years. You've had a good running. Now, my only thing is that, are you going to leave the nest? Because the department has mandate to support the whole South Africa with these loans and with these monies that they are giving you, 25 million. We need to start seeing more businesses come in. But we are not seeing more businesses coming in because the ones that are having good runnings, they are just keeping profits and not really moving on. You've never said anything about profit. You've said about all your loans that you've received. But we are not seeing anything about your profits. Are you making profits? How much profits are you making? Are you able to now be self-sustainable? I think that's one thing that I wanted to know from you. Thank you. And for Nala Finances, I can only wish you the best. Thank you very much.
Allow me to answer that. Thank you, Honourable Member. I appreciate the question. Our partner, Toko Mogosi, and the fact that I'm here, sorry, Toko runs a very big institution. And if you look at the Katana Group, it's a very big company. Obviously, she can't be everywhere. As the CEO, I obviously came to represent our company today. But Toko is very much involved in our business, as is a whole team. We also have an interest of her company. Some of the staff members are in our company. We are represented in our business to make sure we look after interests. So we're not a face recognizing business. We are an actual company that is run, and Toko then allows itself to be part of our business. Obviously, we sit in all the boards together, but we're not here to raise capital because of the color of people's skin. We're here to help the country based on the structure of our company. Outside of that, we do support the whole of South Africa where we possibly can, and we will continue to do that. You know, I'm going nowhere for a long time. We're here to build a business. We're not here to build a business over a short period. We're here to build a business up to a 1, 2, 3 billion rand company, and we'll do it with everybody inside our company in terms of where we are, and we'll bring everybody on board through the Katana Group or wherever else once we're part of our journey. In terms of our capital raise, depends on our cost of capital. Obviously, depends on what numbers that money come in, and as raised, we also make a small margin. We only make up to about 6%. Our cost of capital that we do get from SETFA and from various people is at prime plus one. So we can't put too much margin on. We have to make sure we remain competitive, else we're going to obviously we're going to hurt the SME out in the market. Yeah. So we can't be too expensive, but we do make a small margin, obviously, to make sure we cover our overheads. As a company, we've stayed very lean and mean. We haven't increased our staff numbers because we have enough skills amongst the 15, 16 people we do have to be able to deploy this capital. Yeah. So we have a long-term plan for Easy Mali. We're not here for the short term. And our business is another 5, 10, 15, 20-year company. And hopefully we can grow with everybody's assistance. So I hope that answers your question.
Thank you very much. The last company, I got Africa only on there. I didn't get the, sorry about that, the one based in KZN. Given the tax exemption status under Section 18A of Income Tax Act for NPOs, what mechanism do you employ to ensure that you maintain compliance for the benefit of the public? Are you also charging the normal interest rate from 6%, or are you at around 25%?
I think I thought our slide showed that what interest rate we were charging. We are charging 6%. It's yes.
Thank you very much, Honorable Mafagani. The third person was Honorable Molesani. Over to you, ma'am.
Thank you very much, Chairperson, and good morning to yourself, Chair. Chairperson, yes, my first question, I think I will go to Agri Seed. I just want to check with them because I've heard that they are assisting the emerging farmers. I just want to check with them. Are they assisting the farmers to purchase heavy machinery? The reason I'm asking that is because I'm from the Free State, Northern Free State, and we have only one company that is hiring out machinery, and our emerging farmers are complaining because most of their money, they spend it on hiring the machinery. So I just want to check with that on Agri Seed. My second question on the Agri Seed. Considering that you provide specialized financial services to emerging and smallholder farmers, you've talked about the climate risk that we usually find farmers find themselves in. What mechanisms are in place to ensure that facility effective promotes smallholder farmer commercialization, enhance participation in agriculture, and strengthen resilience against climate-related risk? My second question will go to Nala Finance, Chairperson. Just want to check with Nala Finance. Are they only operating in Thabo Mofutshane, or are they operating in the whole of Free State? And my other question to them is that, given that they are giving small loans to local people, are those people able to pay back the loans, as we know the situation of Thabo Mofutshane, specifically where he mentioned and in Maluti Aprofu? It's our rural area in Free State. So I'm just checking if does those people manage to pay what they're supposed to pay at the end of the month. Regarding the Pagamani, yes, Pagamani, I just want to check. I was busy checking yesterday that you once had a collaboration with an old mutual. Is it still continuing? And if yes, what have you benefited? What Pagamani has benefited out of that collaboration with Old Mutual? Thank you, Chairperson.
Responses?
That says that half of all smallholder farmers are currently living below the poverty line, which is a scary and a startling statistic, and it directly means that they're not able to afford machinery and equipment that they need to effectively work the land. In fact, as much as 80% of smallholder farmers in the country lack appropriate machinery and mechanization. And it is that point, and it is because of that particular situation, and those statistics are top of mind, and we have engaged CITFA in terms of increasing our facility into a wholesale lending facility that will allow us to be able to access and finance those mechanizations that the farmers are not able to acquire at this point. So, Honorable Member, it is an area of key focus, because what we're seeing from an expenditure point of view is that most farmers spend their input financing on hiring equipment, and that could be capital that goes into productive use. So it is an area of focus for us. In relation to climate change, on the second aspect, part of the services that we offer is making sure that when a farmer is financed, they have support from an internal agricultural expert. So we have what we call agronomists, which help farmers at the beginning of each cycle to plan the season ahead. And planning the season ahead means that doing soil analysis, soil samples, looking at what crops are suitable for the land, when those particular crops must be planted, in order to mitigate that particular risk, which is climate risk. But over and above that, there's key perils that we insure against, which we insure against hail, we insure against fire, we insure against pest and disease, and we insure against wind damage to those particular crops. I haven't mentioned the issue of drought, because that is a new insurance solution that has been introduced into the South African market, and I would like to acknowledge the Financial Sector Conduct Authority for allowing the country to test what is referred to as parametric insurance solutions, which have been tested all across the African continent, which is affordable drought insurance cover that has been introduced in South Africa early this year. And those are the kind of risk mitigating solutions that we intend to embed into our portfolio to be able to build resilience and reduce vulnerability to climate change. Thank you.
Honorable Moleta, thank you very much for your question. It's quite insightful and hearty in the sense that when it comes to funding, it's actually a big area for our organization. And the reason being, Pagamani currently operates at an operational self-sustainability of below 100%, which is about 67% currently. So what that insinuates is the difference needs to be obtained somehow. We need to fund that. And our loan funders come and fill the gap on that regard, including Old Mutual through the Masisizane Fund. We have a facility that we're currently renewing, and we've made headway with that process. And over and above that, we have other funders that we look at and support us, including donor funders. And these are basically individuals who get to hear about what we do, and they make the decision to support us. We've got grant funding. We've in the past 10 years received support from the state through the Jobs Fund, the Social Development Wing of National Treasury of South Africa. We've received ring-fence funding specifically for job creation, in rural areas to that effect. Thank you.
You still have 7 minutes more. Oh, okay.
All right. Thank you very much, Honorable Member. Your question is really important to us. We are basically based in Free State, in Thabo Mfutsanyana district. And we wanted to, as we have mentioned earlier, it's a more rural area and former homeland. We wanted to expand to other areas within Free State, including Northern Cape, in all 5 district municipalities. We currently have two offices, and we really wanted to expand to other areas using the model that was approved by SETFA. Out of the 237 businesses that we managed to help thus far, the 198 businesses have managed to pay back. But I must also mention that these paying businesses, they come back again to ask for more. For an example, Honorable Member, the client will come and ask for 3,000 rand, and then after a month or two, that particular loan has been paid up. But they will come back again, ask for more, which might be about 5,000 rand. So it grows further as and when this kind of people, businesses, they scale up. They manage to put systems in their businesses so that they can grow. And our collection rate currently, Honorable Member, it's about 95%, which is fair enough. And we are anticipating that we will be able to expand our business maybe to other areas or other district municipalities within Free State, including Northern Cape. Thank you very much.
Thank you, Chairperson. I just want to, I think this one, the department can just answer it when they are closing. I just want to check with the department. It's all this company or finance companies that are here today. Are they able to meet their loan repayment? Is there anyone maybe who's having problems in meeting the loan repayment? My question again to Agri Seed. Agri Seed, is it possible that you can finance one farmer? The reason I'm asking that, like I'm saying to you, that there is this a farmer in Northern Free State in Fezledapi. They are no longer producing any crops and so forth. They are just dealing with heavy machinery. And now it's very difficult for upcoming farmers to always go there and hire machinery, but they have no option. Is it possible that you can finance one farmer who will deal with that hiring out of farming machinery? Maybe the rates will be much better than this one who knows very well that he doesn't have a competitor in Northern Free State. Is it possible to assist one farmer in doing that? And then my last question, Chair, will be to NSPSA. You said that your first loan is between 1,000 and 3,000 when the person starts to take the loan. And SETFA has gave you a 15 million. Is it possible to do the repayment to SETFA, seeing that you are just giving a small a loan to your clients? Is it possible to meet up your monthly repayments to SETFA? Chairperson, thank you very much. I think my remaining minutes, I will donate it to Honorable Sapo or Honorable Malimat.
You have nothing, Okay.
Thank you, Honorable Member, and I'll be direct with my response. So we currently focus on primary production, which is the planting of field crops. And there's different elements and there's different tiers to the agricultural sector, which will be your primary, your secondary, and moving into your tertiary space. So we have picked our niche, and that's currently where we operate. So in terms of specialized financing for those sort of machine aggregators whose primary activity is only providing machinery into the sector but not planting themselves, it seems as though something that may be suited for another microfinancier similar to Ezimali, who focuses on only machinery as part of their value proposition. But in terms of playing within our niche, our scale and capability, the idea would be operating on anything that relates to the farmer and the assets that they use on the farm to produce.
Thank you very much. The next one is you, Honorable Webster.
Thank you very much. Thank you very much, Chair, and thank you to the institutions, the various institutions, for the presentations. My comments and even a lot of my questions are going to mostly be directed at the department and CIDFA. For me, the presentations, the appearance of these institutions here today and these organizations here today is for us to understand how the ecosystem works. They're the ones who are front-facing and who ultimately deliver to the public, to small businesses, to micro businesses, and so we have to understand how it works and how they're delivering. And so I won't have many questions for them because ultimately, actually, the questions are about the very model that we are using to fund and whether it is actually appropriate for our own context and our own economy. But I will have one or two questions in order to clarify and understand those things. I think we have a fundamental problem when it comes to the issue of microfinancing. And some of it has to do with using an institution like Pagamani, but some of it has to do with broader systemic issues, like the fact that we are working with businesses that are not formalized. And I'll get to the reason why when I explain this. So maybe let me start with a question so that I speak to it. Once I have clarity, I speak to this issue better. And the question is to Pagamani. To say, is your funding business funding? Are you funding businesses? Are these business loans? Or are they personal loans with the intention and with the hope that they fund businesses?
Okay. Please can I once again unreservedly apologize for any disrespect that might have been shown during your visit to Limpopo. It was not intended. And if it was from me, please let me know and I will apologize personally to you. Absolutely.
Pagamani, maybe I should try to advise you, because the character that you displayed when we were doing oversight, maybe you're not aware. Your character is, I don't know how I can put it, it's not nice to us. Even today when you are responding to Honorable Matulela, don't worry. Don't worry, it's not a point of order. I'm trying to assist him because he started by asking for apology and he is continuing to ask for apology, but he repeated the same mistake when he was responding to Honorable Matulela's question. I wrote it down here. I said, you have the problem of approach and your character is not, you don't have a humble character. Maybe you need to try and respond. You're in Parliament and you are talking to the people that are not working in Pagamani. Try to change so that you do away with this question of asking for apology many times. I don't think that will be hard for you to change. Honorable Webster, your time is stopped. You will have your 15 minutes. Sure, my dear, you wanted that. I saw you. I'm not interested. Okay. Sure.
Thank you, Chair. I appreciate that insight. I think it's nerves, but I will work on it. All of our processes start with understanding the client's business idea. They have to have a business concept. Consumption loans are not repayable. because there's nothing to generate an income to repay the loan. So they go through business training, and as I mentioned earlier, I think within a couple of days of us dispersing the loan, we go and check that product has been bought. 80% of the loan needs to have been spent on product within 7 days of the loan being dispersed. There's monthly centre meetings where there's follow-up on all of those things. And the fact that clients are able to come back and get bigger loans is based on the business evaluation that we do on each business at each loan cycle, which we do a basic business balance sheet, so that's stock on hand, cash on hand, and then a very conservative calculation of debtors. If a business is not growing, they can't grow the loan size, but our loan sizes are growing. We also have a 77% retention rate, which means clients are able to repay the loan and come back. We very much have clients in business, and we're very much against not having clients in business because it's not sustainable for the goals we have for the clients or for the organization.
I'm going to ask you again, and when I ask that, maybe this time you just answer directly. Are they business loans or are they personal loans with an intention to be used in businesses?
Business loans.
They are business loans. Okay. If they are business loans, what are you using exactly to determine the viability of the business? Because that's what you would do when you assess a business and the longevity of the business, but even just the existence of the business. And I say this because my colleague spoke to the oversight that we did, where we found the chickens. So, if it be a business loan and not a personal loan, what is the criteria you use to establish the very existence of the business, the ability of the business to be able to pay back, but also at the same time, the ability, the viability and sustainability of the business. I ask this because an example that Agri Seed shared, they shared very openly and very clearly, it's very clear how they assess the existence of businesses and the viability. And I ask this, and this is not to be difficult. I understand the context within which you're working. It's informal business. Agri Seed is working with formalized businesses. You're working with informal businesses. So how is it a business loan? As an example, do they go into business accounts? Maybe let me ask that. Do the funds go into a business account or a personal account?
It goes into a stokvel account, a group savings account.
Goes into a group savings account. All right. And the group, is it a business or is it just a stokvel?
It's a group of individuals that are running small informal businesses.
But so it's not a business account, it's a stokvel account.
No, it's not a business account.
Thank you. I wanted to clarify that because it's important from a departmental and perspective. Because what we could be doing from an economy perspective is thinking that we're investing in the development of businesses and the growth of businesses. We want impact and we want to see businesses growing, and we're not seeing it. So you look at all the indicators and we actually don't have growth of businesses. We don't have a informal or micro or small business economy that's actually growing. And part of this could be because we are investing, and what we're actually investing in is supporting personal household consumption, which in and of itself is a need, but it is not the mandate of the department. And so that's why I'm asking the question that I'm asking. And I then want to bring that to the department and to SITFA. To answer that question, what is your impact assessment process? And what is the impact of these loans that happen through an intermediary like Pagamani that goes to a stokvel? That does not go to a business account. And I understand why it doesn't. The businesses are informal. So that is something that we really need to look at, because we can be going around in circles and circles and doing things which on the surface look great. It looks like we're working with, and Pagamani exists actually with or without the department. And that's why my focus isn't on the intermediaries, because they exist independent of the department. They just happen to be working with the department. But they exist in and of themselves. The bigger issue is there impact in what we are doing? And how are you as a department making sure that whatever the investment is, it ultimately is growing a sector versus ultimately some of these monies land up in household consumption. I think there just isn't enough monitoring from the part of the department, or ensuring that at least institutions, when it comes to this particular funding, are monitoring the ultimate impact of the funding. So that's the first. The second is about the formalizing of informal businesses. We will continue to be in this cycle and have these issues if we don't find the most simple way of formalizing informal businesses. A one-pager registration that speaks to licensing, all the municipal factors that need to be considered, and just basic registration, at a basic level. We will continue in this cycle if we do that. And we saw this firsthand, I said, because we went to Limpopo and we saw numerous businesses that have been funded through intermediaries, where it is very clear. We saw the same in the Northern Cape. It is very clear there's no business here. Whatever was taken, whatever funding was received, and it was used for household consumption, because that's actually a real need. That's not your mandate. So that's really the second issue. The third issue is about interest. And the mandate, the SIDFA department mandate, and it's actually even in one of these presentations, is a developmental one when it comes to funding. And all these institutions that are intermediaries here, and all the funding models, all interest bearing. Yes, it's NCR compliant, great, but that is not what we are expecting, because there is a developmental mandate. So while a microfinance funding, while a microfinance loan, while a informal business, while a micro business is borrowing 2,000 or 3,000 and then paying interest on it, and we're thinking that's going to grow the business, we are kidding ourselves. And there are models that exist, Kenya, India, Bangladesh, where governments have delivered on interest-free or low-interest models. And I think that is what we need to be focused on. Because we're not going to accomplish the things that we need to accomplish if we are still moving away from the developmental mandate, the developmental funding mandate that this department has. And then I want to say, I can understand the need for intermediaries in instances where you're talking about agriculture, which is a specialized field, where you are talking about asset funding, because you can't imagine the government now going around buying assets for businesses or going around and monitoring that. That is understood. But again, we need to look at how do we work with that within a low or no interest, or at least a blended funding model. Because this idea of NCR compliant rates, they're still commercial rates. And we're still not fixing the issue of many of these businesses die because they actually cannot afford to be paying the interest that they're paying.
3 minutes left.
The interest that they're paying. And then I had a question. Yeah. For Agri Seed. I'd wanted to know, I think you've answered the interest. I just want to confirm that the interest that you charge is 12.5%.
So just a facility, and it was structured at 9 prime less 1. The interest would be about the 15% mark. But now that the agency has restructured our financing model and reduced it to 5%, it means that our interest will be around the 10% mark for this planting season going forward.
Thank you very much. We move over to Honorable Sapo.
No, thanks, Chair. Not very nice. I only have 2 or 3 questions. I will start with Nala. Can you please remind me your name, sir? Tabiso. Okay. Okay. When was the company registered as a credit provider?
2023, honorable member.
2023.
Yes.
When did you resign?
Municipality.
No, in the board. As a shareholder.
I'm still a member of the board.
Did you not resign at some stage?
At some point, yes, I did.
When was that?
Same 2023, yes. And the recommendation of SETFA said that I must return as a director.
What was the reason for your resignation?
No, we wanted to, because, I was still working for municipality then. That was then before I resigned from municipality to work full time. So the recommendation from CIFA was to say, they want, if you are full time in business, you must be full time in business. So you cannot work for NALA and then also have a full time work on the side.
When did you return?
After resigning from municipality.
When was that?
2023.
2020?
3.
Are you sure about it?
Yes, I resigned in 2023.
Okay, was it not in 2024?
No. 2023.
Okay, when did you make the application for funding with SETFA?
Last year, 2024.
Okay.
Yes.
In which month?
We started the application in March.
Yes.
2023. It got approved in November. On the 12th of November, we got money in 2020, this year, March the 14th.
This year?
Yes.
Okay, and when are you returning in November 2023?
I returned to be a board member. I returned to be a board member because there was a recommendation from CIFA to say, if I'm full-time and the ladies cannot run the business without me, it's either I resign or I must be full-time as a company director. So then that's when I returned back to the company.
Where were you working before?
For municipality for 17 years as internal auditor.
As an internal auditor?
Yes.
Okay, thank you very much. Okay, thank you very much. How much how much was it approved for you?
15 million rand, we got 3 million rand on the 14th of March.
Yeah.
Yes.
Okay, thank you very much.
The only disbursement for now is 3 million rand.
Okay.
So we are still applying for the next disbursement.
You said some of your clients do not have bank accounts. How do you get your money back?
They pay cash and we manage them. Chairperson, with due respect, I must indicate to you that these people that come to our offices to ask for a loan, many of them are people that are selling in the taxi ranks.
Yeah.
And many of them do not have, some of them, not many, but some of them do not have bank accounts. And those that we do not have bank accounts, we encourage them, we'll give them around 1,000 rand, but we will then know where they stay and where they sell. And that's why I was speaking about the due diligence that we do. And then after we encourage, before we can go to the second loan, from 1,000 rand maybe to 3,000 rand or 5,000 rand, we then encourage them to open their bank accounts.
Okay.
Yes.
Thank you very much. Pagamani, I just want to check, so far how much do you owe an entity?
Sorry, could you repeat the question?
How much do you owe SETFA?
SETFA, we currently have a 60 million rand facility.
60 million?
Yeah.
Okay.
And we've just drawn down 24, and before the balance was around 21, so I think it's around 48 million.
Okay. You are up to date with the payments?
We are always up to date. I don't think we've ever been late on a payment.
Mm-hmm.
We've never been late on a
We've never
payment,
been
and
late.
I don't believe there's ever been a write-off for Pagamani with SETFA.
Okay. Thank you very much. As a Mali, you indicated, sir, that you've got 15 employees, right?
That's correct, sorry.
Okay. Can you tell us the demographics in terms of gender, race, and age of those 15?
Yeah, very much so. Your honourable members, so we have 15 staff members. We have a couple of young ladies, young little black ladies who joined our team, done an incredible job. We've got CFO, CEO, COO of the company. We've got a credit manager of the company who has a credit person with him. It's probably the top credit guy in South Africa. Average age of our staff in terms of the high end of our staff from the skill point of view. Maybe I push the age up a little too high. It probably runs at about 50 to 55 years old. And our young team below us, average age between 25 and 30 years old. Yeah. All Johannesburg based.
Can you submit that in writing?
Yeah, very much so.
Okay. You were given 6 million rand in 2021.
No.
Yeah, okay.
No, first drawdown was 20 million, then 30 million. 20 million was our first drawdown.
Uh-huh.
And then 30 million was our second drawdown. It was in our presentation, yeah.
How much so far?
Sorry?
How much in total?
50 million was the drawdown, all utilized already, all in the system already, yeah. And all, about 15, 20 million already paid back here.
Okay.
And the rest is in the system with customers, assets that we finance with customers. We've applied for another drawdown of 25. We're just waiting for the legal documents to sign now, so we can disperse the next 25 that's been approved here.
Okay, when did you apply in 2021 in terms of a month?
When did we apply? In terms of October 2021.
Okay, and when was your application approved?
We applied 2021. It took us it was about a 6-month process.
Yeah.
And we drew down, so we would have started the process before that, but actual funds were dispersed to us in October 2021. Yeah.
Okay.
And the second drawdown, July 2023 and 2024, 30 million was approved. 15 million was dispersed to that up front, so we can deploy it first before we draw down. We don't want money to lie in our bank account. And once we deployed all that capital, the balance of the 30 million was dispersed in March of 2024.
Okay, prior to the funds of the entity, were your company operating?
Yeah, so remember I said to you up front in my presentation, we were discounting deals to a bank, which
Yeah.
means you will get a deal today. Customer will buy 20 million of assets, and I've used this situation. We'd discount to a bank. The bank would then take the transaction. They would pay us in what we refer to as a day one profit, but that was not sustainable. We had to go out and market and raise capital here, because those bank departments are never going to survive, and we wouldn't survive just through discounting structures. Had to raise our own capital.
Okay. No, it's fine. Thank you. And to Agri Seed, you indicated that you are working in 6 provinces. How did you determine why the 6 and not the other 3?
Thank you, Honourable Member. So the commodities that we plant grow conducively, or that we finance, they grow conducively within those 6 particular provinces. So it's because of the concentrated nature of the activities that we finance. So for example, within South Africa is what is known as the maize belt, Mpumalanga, Free State and Northwest, where maize grows conducively. So we're in those areas because of the geographical profile of the commodities we finance.
Okay, no, it's fine. I'm satisfied with that. Last thing from Ezemali, you indicated that you possible created 500 plus jobs, either created or maintained. How did you determine that?
Yeah, so once again, we report every month into the set-first structure. So remember, we have funded about 250 to 300 SMMEs in the structure already. That's what we funded. Through us, obviously our teams then go check in terms of what we've, asset-based what we've done, and what staff member they've, so we've actually physically gone to each one, because remember we sign them up individually as a customer. We know exactly who they've employed over and above that to manage those assets, and for that we've come up to the number of 500 here, which has been reported to us by the SMMEs here.
Do you have that information?
Yeah, we got it all. We report back to SEF every month here, in terms of the transactions we do and who we finance, as well as what's created from that show.
Okay, no, it's fine. Thank you very much. The last question, Chair, that I have is for the Stockfell Association. You indicated that you gave them a maximum of 3,000 rand as a group of 5, or as a group.
within the group, the individual funding. So sorry, Chair. You know, the 3,000 is for per individual.
Per individual?
Yeah, within the group. So our loans, the maximum that we can give a person in a group is
It's not, it seems like it's not working, Chair.
As a my list, ma'am.
Hello?
Sure.
Within a group, the maximum that we can give to a single person within that group of 5 is 3,000 rand. But not everyone gets 3,000 rand. One will take 1,000 rand, one might take 1,500. So the maximum that each person can get in the group of 5 is 3,000 rand.
In a group of 5?
In a group of 5.
As what? They are a group of what as what? They are
So-
a group of 5 as what?
We know when we land, I think we spoke about this Grameen model, Grameen Bank model. So when we train the people, we put them in a group of 5 people.
Okay.
And then there's a chairperson. So normally when we lend to the people in the same area, the people that know one another, but they are running businesses. So when we disperse to a group account, and then they take the money from the group. The one person will say, I'll take 3,000 rand. One will say, I'll take 1,500 rand. One, I'll take 1,000 rand. The reason for that, we don't just deal with individual. We want the peer pressure that if someone is defaulting, we are not really chasing one person. We are talking to the chairperson. The person is not paying, so they put pressure that person that the person pays back. At times, they will even put money together themselves just to protect their group that they should be paying. So the 3,000 rand is not for the group of 5. It's a maximum for an individual.
Okay. They are a group of 5 doing different businesses?
Yes.
Okay. All right. The last question, Chair, is to. Oh, no, it's for the department. I just want to check why the First Union Financial Services is not here. Opening our young.
So we asked for 5. So only the 5 that we asked for. I mean, there's also SEF that is also, but there's 9 of them, but we asked for 5. So the 5 is here that we asked for.
Who chose the 5?
We got it from the house.
Okay.
Yeah.
Okay. No, it's fine, Chair. I can raise that separately. Thank you very much.
Thank you very much, Honorable Soko. Honorable Malimachi.
No, thanks, Chair. This question I want to ask it or pose it across. What mechanism do you have in place to reach your clients so they understand that they're in business and there are consequences? And when I zoom specifically to Stockfell, you are very clear that you are not lending individually, you are lending a group, which if a person is not smart enough will not realize that you are running away from responsibility of dealing with an individual who owes. You want this responsibility to be carried by a group. And it is you yourself who said, these people are doing different business. Now, I'm in this group, I'm doing my business is doing very well. There's a member who's doing a different business. He's not doing well, it's not even paying back. Now, Stockfell says, no, we gave you as a group. It's up to you to ensure that that particular person brings back the money. I am telling you now that you are doing it deliberately because you don't want to carry a responsibility. Unless otherwise, you clarify the first issue of what kind of education you're giving to customers. You will never realize that because in this case, you are bringing a burden to me whom I'm very clean from that because I know my responsibility. That question when you deal with that. Nala, Nala. When the money is no longer there, you deployed all the money. Where else do you get the money to sustain the customer and also ensure that that customers, they don't run out of the money? It's Nala. Yeah, it's possible because this Nala, they look like Nala. That's that. I think the question is clear. What was not clear was my face to you. The question is very clear. This man is not there. You are telling us, which one way or another you are pleading to say you were given 15,000 is not enough. You have got a lot of people who are coming. It's like you are growing. We want to agree that we are growing. In case of shortage of money, where else do you rely to get money to run your own business?
Chairperson, through you, can I answer now? Okay, thank you very much. Oh, okay. Thank you, Honorable Member. We resort, because now like we are waiting for the second disbursement of the money, we resort to give our clients less of the amount. And we usually wait for those that we have already got the money to pay it back. So as per our list of 3 people that are still waiting for money, we then work according to that particular list. Whoever arrives first receives money.
The purpose of calling you people, all of you, is not to come and crucify you. It's to try and assist you. If you don't come clear, we're not going to tell the department that you want money. My question is very straight to you that in this case, because you are not getting money, it is supposed to flow so that you sustain your own market.
Yes.
You end up having these challenges, and you are not telling us to. Because we want you to create jobs. We want to assist you. So you must be clear. If you don't have money, don't be like a landman who will want to look rich when he's poor. Show that I'm poor so that we assist you correctly. So the department, I think, is very clear that somewhere we play a role by not necessarily allowing the child to go that side. I just wanted to clear that on your behalf.
Yeah.
You see, Agri Seed. My understanding was that you know your target. In this case, I would want to say all South African provinces, especially those who are rural. But I don't see KZN. And KZN, when it's not here, then it means people of KZN are not benefiting from you. Which, one way or another, you are becoming a backbone of our economy, saying let's work the land. They too, they deserve to work the land. What strategy do you have to ensure that all these rural provinces are benefiting from you?
Thank you, Honorable Member. And on our list, it's very noticeable that KZN and Eastern Cape are missing. And those are 2 areas that are quite big when it comes to smallholder agriculture and farmers who have access to land. For us to scale our model, it's a simple matter of having access to capital. The more capital that we have, the more we can have satellite branches and offices and be able to deploy our agronomists and agricultural specialists to be able to support these farmers. We're very clear that financing alone is not enough. That's why we paired up with an extension officer to make sure that they support you throughout the growing season. And that requires capital to be able to scale.
If it is a wish, who do you wish must assist you in there?
It has to be a multi-collaborative fund. So what we're doing in our key strategy is to look at private companies that need grain. And I'll give an example of some of these private companies that are consumers of grain. For example, Tiger Brands, through their milling facilities, they would need maize. SAP, through their alcohol manufacturing process, they use a lot of barley, but they also use a lot of maize. So they are demanders of the product. So how we've set ourselves up is to aggregate the products from the farmers to be able to supply to the private sector participant that need it the most. So we're looking to lobby those stakeholders to finance the primary production instead of only the final output, which is the grain, without bearing any particular risk. And obviously from a blended finance point of view, it is making sure that we partner with government as well to be able to crowd in a sufficient pool of capital. Because in our view, and through a discussion that I was having with our chairperson yesterday, it would be an injustice to the country if Agri Seed Capital wasn't a multi-billion rand asset manager of risk and capital, deploying it into the sector.
Thank you very much. You see, we are not in a business of one institution. And thank you very much to have identified and be able to tell who must come in. For your information and your benefit, we are live here. They are listening to you. But of more important department, I think it's very clear that you get it clear that somewhere we need to extend our hand, especially lending hand, so that we cover all the provinces, as I said. Thank you very much. You see, when we deal with Pagamani, we must start from this angle that I don't want to give you what happened in Tumeri. I want to extend it to say when we go to Vembe, what happened was that it went to an extent of hiding the beneficiary so that at the end of the day we interact with the beneficiary. But that was not the only thing. Here's the only thing. The only thing is that this time we did not want to rely on whoever to tell who must we visit. We handpicked differently so that we don't hide anything. And when we arrived there, we realized that those people were not made ready to can receive us. But, Chair, through you, I want it to be noted that, including you, the department, what is lacking there is more of monitoring and evaluation of everything that we put in place. For a mere fact that is not there, no one is going out, follow the money, check the process. And we will come and find that we are very much personal to each other. We have no business of shutting down the businesses. We are here to strengthen the system and ensure that this thing benefits the community outside. I would suggest that, Chair, let the department take this responsibility that in future of everybody that we are utilizing with the reasons that you gave to us, there be a proper monitoring of everything so that at the end of the day, we don't wake up, go and shut the business, then we add on the various number that we are complaining about is high employment is very high. Yet there are some initiatives of the government. This issue of intermediary is not a one-man issue, it's a policy matter. You don't just wake up and say you close down, you do this thing. It's a policy matter that will need the NA to sit down and say, we shift this policy, we formulate a new policy, we do this thing. But here, we called you to account that during the visit, 1, 2, 3 was being identified, department and you, not alone. We want this thing to be dealt with. I want you and the department to tell us here, what have you done to correct that situation there? Here's the person who misled the department, the entire portfolio committee, we go to a wrong beneficiary. Here is a person who misled us and said there's a beneficiary here. When we arrived, that beneficiary is not there, to an extent of lying a financer, that the beneficiary is mentally deranged. That was wrong. So, Chair, without even being to who, when the department and Pagamani want to come in, let them share with us exactly what measures, correct measures have they implemented to ensure that really such is not happening again. Because that was what we never expected to see on the ground. Thank you, Chair.
Thank you very much. We'll listen to Pagamani. I don't want to be unfair to other honorable members. Department will then note everything and wrap up everything from all the honorable members, like we did from the first speaker. Pagamani?
Thank you for your question. It came to light on the 20th of May during an oversight visit by the department that the wrong client had been visited. We took action in terms of conducting an investigation. I personally visited the area again, including Mrs. Ngobeni, who was very stressed by this process, and her husband, apologized for what had been done, and 2 senior members of our staff have lost their jobs, to show that this is not something that is acceptable to be done. Those were the 2 that were directly involved in misleading the party that visited.
Thank you very much. Honorable Matulela, I'm also a part of the members of the committee. Before I allow you to speak, let me also say what I want to say. Pagamani, you, from the beginning, you tendered your apology, and you were very sorry that the honorable members were misled when we arrived at the venue, at the Zumeri village. I think I want to say the apology is accepted. The Honorable Malemaja touched on the issue that where we were misled, what is it that you did? Then you are saying to us you have fired the people that misled the members of the committee. I don't know, because now we are saying we need to make sure that we deal with unemployment. And you are here, you as the owner of the company. What if we fire you? Because those people made a mistake in your company and you were there. I don't know whether you understand me. Because if ever there were processes of forgiving you today, what about those other ones that you fired? In my opinion, I was thinking that maybe you'll sit down with your people and say to them, this is where we did not do correctly. Let's try and make sure that we open up our eyes, we go out of the offices, and then we do our work as we promised. Because the department funded you with love and with hope, hoping that you're going to assist the members of the villages or the village in that Zumero area to deal with the basic needs of their families. So now you're saying you fired, how many did you fire? 2. Now, if we go into their families now, what is going to happen? They made one mistake, let me say that, because it's only in that village where they swapped the clients. And then you, CEO, you'll have to look into this matter, DJ. Look into the matter. People are fired here. And it was not their mistake alone. Even the leader did not monitor whether they are doing their work or not. That is why you see now in our committee, Honorable Matulela will always say, you know, we want our work to be broadcast. She wants the leader to see that she is working so that they don't fire her. What is it that you do, Wena, in order to protect your people? Maybe I should wait and you respond.
Thank you, Honourable Chair. We followed a fair process, and we in fact got an external party involved so that there was no bias. This has been a huge and difficult time for me to do this with people that I've worked with for over 10 years, that are most trusted to me, that I've spent hours traveling around the country discussing life and things, and I understand the circumstances that the people were under. They were given opportunity to come clean and to say, this is what I did, I've made a mistake. Where the process broke down is they continued to cover up and lie to us based on the evidence we received from others. And that got to a point where there was a breakdown in the relationship with the organization. And we departed. We parted paths. It is incredibly sad for anyone to lose their job. I understand that.
Okay, let me leave that. Let me leave that one in your hands, and the CEO deal with it. Make sure that you do justice to what you did, to the steps, the hard steps that you have taken. I'm not saying go and do 1, 2, 3. I'm saying go and look into it, and then make sure that you see what you can do. Okay, with the 2 ladies, the Ngoveni family and that other one that we swapped, I forgot the name, the Mnisi. Ngoveni and the Mnisi family. What is it that you did now in order to assist them? Because Ngoveni, even if she was a wrong client, but she qualified also to be assisted. She's selling the chickens, but she was only having 4. And there were promises that were made. Honorable members, even if they did not know that this is the wrong client, they tried to make sure that they come up with plans so that you can end up assisting her. And the one that was wronged, what is it that you did in order to assist them?
So both Mrs. Munisi and Mrs. Ngobeni have current loans with Pagamani Foundation. They're not paying their loans following the visit. We've had no further payments. I think they're waiting to see, well, Mrs. Ngobeni is waiting to see what the local economic development will do. I believe she has been registered, and that she was asked to find land. And if that land was seen to be suitable by the LED, they would give her money to start farming there. When I was there, they did have many chickens. Her husband is a retired government employee, and the house is proudly bought from his funding. And this next round of chickens was bought with funding that he had.
Okay, we are very thankful and we will congratulate the day we can go back, if ever we can have chance. But please monitor that when we go there, she did not slaughter all the chickens and she's left with 4. We want to see the business growing. And my advice to you is that in your presentation, you said there are other group of women that sometimes do celebrate their progress. So my request is that every client of yours must make sure that they celebrate the progress, not that they are being, there's this hide and seek when there are visitors. All of them must be visible. This one goes to the department. I want to check, when Nala was doing the presentation, he said he does not have the FSP certificate. Does your rules allow you to, FSP, if ever I do understand, does your rule allow you, your rules allows you to pump money into a person who does not have all the requirements? Or are you having a way of assisting him to end up having this FSP certificate? If ever you can, please make sure that at the end of this week, the assistant to Ntatanala, you have the certificate, because you cannot operate with the money while you don't qualify. You need to be qualified to work with the money, and then you continue. Otherwise, this thing will continue to want. If people come and do the monitoring, they would want to see the certificate. If you don't have it, they will even like about shusheja, or you can close the business because you don't qualify. And again, to the department, others are being given a lot of millions in order to start their business, but Nala is given only 3 million. I'm worried. What is the problem? What is the difference? Why don't you give them, he said he qualified for 15 million. Why don't you just give him the whole 15 million so that he can run his business without any problems or any stress? So my wish to Nala is that thank God that you are here today. And then you got matats from other members. I heard that they are wishing you the best to continue with your business. So just thank God that you are here today. And please don't disappoint us. Next time when we come to visit to Free State, we want to see your work done. And the good part of it is that it's next month. The good thing is that we do not ask you to give us the people that you should visit. That must be clear to you. We are going to choose on your list. And when we go there, we must find everything being up to standard, so that at least the CEO will also pat himself on the shoulder that at least with Nala, I got a person to assist the poor of the poorest. We are,
next month.
no, don't worry about that one. Don't worry about it. I even don't know where did he get the next month, but he'll explain. Okay, from Ezimali, if you have lended the people the money and they are failing to pay back the money, what measures do you take in order to assist them? Do you sometimes have a way of striking off if ever you see that they're struggling, and assist them again? Yeah.
Yeah, thank you, Honourable Chair. It's a very good question. The last resort we do at any point is take back an asset from a customer. Because we are a rental-based asset finance business, we take a customer on a journey. Sometimes, depends how we structure those transactions. Sometimes we do monthly payments in advance or arrears. We sometimes even do quarterly payments. So we allow the people to build up their network first before we start collecting. So we don't take back assets unless it's right to the end where the company's really struggling. We then take the asset back. Remember, we have a relationship with the supplier. We pass it back to the supplier, and we on-rent it to another customer. So straight away, and at that point, whatever it might be, we might have a situation where we assist the customer. In most cases, a lot of those customers only 1 or 2 months in arrears, but their companies fail. So last resort, we don't take an asset back at all. We try to manage the customer right through a process. We've done it with many, many customers. And unless it's really at the end of the end, they can't carry on, we take the asset back, we move it back to the supplier, we on-rent it to another customer, and we set up another transaction with a new customer. Yeah.
I'm sorry, this one was off. Should I repeat? Okay. Thank you very much. I wish you all the best. Mayor Matulelo, second round, honorable members.
Thank you, Chair. Thank you very much for this opportunity.
Okay, sorry. We are now on 13:39. I want to check because we cannot go back to 15 minutes. Otherwise, it won't be good for us and our stomach. Please be short, ma'am.
Thank you, Chair.
Yeah, but
Thank you
Chair,
very much.
Why can't we agree on what time to close? Because I'm going to the house. I will need to.
We are going to the house.
No. Don't jump and speak on. I want to.
Oh, by the way, there's lunch in between.
That is what I was saying, because we are going there by 3 and I never ate anything. That is why I was saying, talk to us and say, second bite, not around. Then what must we do so that we be able to grab something?
Okay, it's fine. Can we agree on 2 minutes, honorable members?
Oh, 2 minutes, Chair. Let me do this justice for all the honorable members and all the South Africans out there. Chairperson, we want our lives also to be broadcasted because it's a constitutional mandate, not because I want maybe the Commander-in-Chief to see me. They know I'm here. Then, yes, I was just clarifying because we are live there. I'm not doing it for the Commander-in-Chief. I'm doing it because it's a constitutional mandate that our operations must always be live. I can't live as Mali. I can see everyone has got an impression that everything is going good there as Mali. So thank you very much, Chairperson, for the second bite, because I was there in the oversight in Northwest as Mali, if my memory is serving me right. As Mali was accepted in CIFA's program despite not meeting the minimum two-year operational requirement and without a clear record of microfinance lending. CIFA's policies do not make provision for waivers, which means this approval represents a blended disregard for internal regulations. Chairperson, a very strange and very painful thing happened there in Ezesmal. A public school, already funded by government, extended e-credit for leasing printers. This is outside CIFA's legislative and policy mandate, which is to support small businesses and cooperatives, not state institutions. Using public money through CIFA to finance another public institution via a private intermediary, it's a misuse of resources and effectively amounts to double dipping into state funding. Most of the people, when they got funding, what DTI, they're not allowed to go and get funding was said for because but he double dipping. So this is what happened with ESS Mali. And ESS Mali, when we were following up even their regulation in terms of interest, it was not in line with the Credit Act. So ESS Mali, I think you are owing us an answer on this regard of what transpired for you to choose out of all businesses that are starving out there. You just chose to give a school the funding. And also I'm very concerned that these women that are said to be owning this business are not actually at the front line, I can see. So with Inala case, it illustrates both the resilience of rural communities and the failures of the state to provide direct financial support to survivalists of small businesses. So the way, however, it is very, in its existence as a cash loan, it reflects the vacuum left by the state institutions such as Land Bank, CIFA and DSBD, which should be providing accessibility, affordable finance directly to marginalized communities out of the overall DG and the CEO. All these models, they've shown that they are not creating entrepreneurial a way of that can be, we can say that they are building on businesses, but it's a lending, it's a loan, it's a
Your 2 minutes is gone, Mami.
they are loan sharks. Okay, Chairperson. But lastly, I want to go straight to, that's why I'm just combining them on this one. The repositioning, mentioned NSPSA. They are now repositioning entity from compliance self-regulator. So they were not, before they established to assist, of which we were going to say, no, you are correct, department, if you are working with this kind. You can assist these people, the stock files, you give them teachings and everything and make sure that they grow. But now they are changing to be again a loan shark. It really gives concern, and I still stand with that we don't need intermediaries actually. What makes you, department, can you just answer that? What makes you to give these services directly? Yes, they are doing on their own. People must have the department with the same services that are available to the department, and they choose.
Am I protected?
And they can choose to go to the similar private sector, because this is a private sector.
It's now only 4 minutes.
Yo, but what being led by the secretariat in this portfolio committee, I'm talking is keep on whispering to the chairperson, as if the chairperson has got no ability to chair this.
Oh, we are talking about any other thing, not.
No, but you are intermediate. You are.
It's fine.
It's an intimidation.
It's fine. Your 4 minutes is over. Maybe I should allow the Honorable Webster to raise, and then the response will come at once.
Thank you. Thank you very much, Chair. Mine is just a comment that I had omitted and I wanted to share with the department with regards to this issue of the group lending and the personal versus business lending. I visited Grameen Bank some years ago, maybe 2019, and that model has worked in various areas. Worked in Bangladesh. I visited Grameen Bank in America and saw how it's worked in those communities. I think we need to be cognizant of the differences that exist between those contexts, especially socially, economically, and ours. One of the key differentiators is that we are highly indebted as a society. And so what happens is that when this money comes in, even through the stockfile account and through the group, when it finally gets to the person who's being lent the money that is supposed to be for a business, it ultimately will end up either in consumption or it's highly likely, it's more likely than in those contexts that it will end up in consumption or in paying off the debts. So I say that as an example to say, there's a lot of models that we can learn from, and even I often make examples of some of the models of peer countries. But I think we always have to take into consideration our own context as a country. And I think sometimes it's okay to say we piloted it, it doesn't work for us. And that's progress in itself, that we took a model, we tried it, it didn't work. Let's maybe look at what can work for us as South Africa. That's all I wanted to say. Thank you.
Thank you very much. Yes, you'll start, and then the department.
Honourable Chair, Honourable Member, thanks for the point raised. Let me just clarify very quickly. when we applied through the set for structure now 4 or 5 years ago, obviously we came in as a business and we then applied and obviously got approved. The point raised by the honourable member, in terms of a school, we funded a school in Rustenburg. It was a school. They were looking for 2 laptops or 2 printers, and it came to us via a supplier. And the supplier brought it to us. Being a supplier, we're obviously trying to assist them. And the school required 2 little printers to help the children do their schoolwork, etc., etc. When it was brought to our attention, we didn't realize we couldn't do that because we didn't understand exactly that we couldn't do a school. Since then, clearly we haven't done it since because we didn't realize that didn't fit the mandate. We haven't touched the school. We will never touch the school again. We have requested funding, and obviously we won't do that because there's a massive need inside our schools, yeah. So it was addressed. It was a fault on our side. We made a mistake because we weren't aware of it, and it hasn't been done since, yeah.
Thank you very much, sir. Over to you, sir.
Thank you, Honorable Chair. With all due respect to the honorable members, I do want to reiterate that Pagamani Foundation, we distance ourselves from the notion that we are loan sharks and the very nature of what we do. And I do appreciate what Honorable Molitsa has mentioned to say the Grameen model does work. And yes, country context needs to be considered. In our case, I believe it is important to mention that we do ensure that consumption versus business loan checks are undertaken. So we do carry out what we call LUCs, loan utilization checks, to ensure that after dispersing funds to clients, we ensure that our loan officers, or rather as part of our model, the loan officers has to do a follow-up.
Now it's indicating that the house is starting the NCOP.
Okay. All right. Okay. Okay, so as a point of departure, upon the loan utilization checks being undertaken, we also have a quality and assurance team that also goes to check that indeed the loans have been utilized, and these checks are done with the clients. So we do acknowledge that the M&E needs to be strengthened, but we are also limited of resources to check with each and every client. So when our Q&A goes out, it's based on samples and not entirely the 100% population. Thank you.
Okay, thank you very much. You were not there when we were in Limpopo, especially at Koshi Zumeris area. You were not there. Please go and ask for recordings if ever they were recording. And then you see why the honorable member was saying that. But anyhow, thanks for your response. Department, we must be out of here by 2. Over to you.
All right.
To the department.
Thank you, Chair. Just I will touch on a few issues. I think there's an issue that was raised regarding.
After 10 minutes, it will be fine.
Regarding formalization of these businesses. I think our duty is to make sure that we link, because we've got the target of formalization in terms of our APP as an entity. And our job is to link that, to what we do and what we fund in the MFI space also, not only just dealing with the businesses that are outside, but we look at home also as an entity, so to make sure that the formalization happens across. I think the issue of the interest rates is a matter that we've listened to the members in terms of looking at different models and how we fund and what we fund. Within the ambit of also us as an entity being a sustainable lending institution without breaking the rules that we also operate within. But there has to be a look and a real look at how we then do this going forward. It is upon those reasons that also Agri Seed is talking about us reviewing the interest rate from what it was to a lower interest rate, so that then they can then in turn, reduce the burden on the small businesses. And this work that is continuing, that we'll continue to relook at. I think we continue to look at other businesses and developing new businesses that will also look at different models. But it is our mandate. Poverty alleviation is the mandate that is given to us. And the models that you've seen that the macro lenders have applied in the rural areas with its shortcomings have assisted a lot of black-owned women in rural areas, to alleviate poverty. Yes, there is an issue that we must deal with around the growth and sustainability of those businesses, because you would find that someone has been doing the same thing over the years. Yes, others do not want to grow to the next level, but how do we keep them sustainable as businesses that have been funded? But if you were to get by the case of Pagamani, and I'm hopeful that when we go into other areas and we look into the beneficiaries, like yourself, beneficiaries who've done a great job in this space, we'll see that actually there is a difference that is being made by lack of staff in the rural areas. And I'm hoping that when you get a chance to visit some of the beneficiaries of some of the intermediaries here, like Yonala and Free State, we'll get to see how that changes the lives of the people. As I say, poverty alleviation is key to what we are trying to drive, and creating sustainable businesses is key. Yes, there is a conversation around the niche sectors and the view that, for example, Agri Seed, there's an understanding because it's an agri sector. But there's two reasons why we do the work that we do. One of them is to extend the reach into places where we can't reach, right? That's 60 seconds, Chair. Okay. Extend the reach into areas where we can't reach, and mainly the underserved areas where we cannot have, it will cost us a lot of money to have offices in those areas. And that's one of the reasons. And two is to leverage on the risk mitigation strategy of a partner that exists within the area. And I noted the issue of the Grameen Bank model in terms of us really looking into it, and I would not say no to that. It's something that we can look at other models from elsewhere and benchmark accordingly. On Nala, indeed, Chair, we gave them 15 million. They have it approved, but they draw down 3 million. Then they would draw down another 3 million and another. So based on, and then they go and check if their model works. Instead of them taking the whole 15 million and deploying on the ground and losing it, they took 3 million. So now they know that this is how their model is going to work with the people on the ground. They will draw down again another amount until they finish the drawdown. So they are due for another drawdowns, which I believe they will be then drawing down.
Is
now.
it a loan or?
So we gave them a combination because they start up, gave them a combination of, there's a small amount, I think about 2.25 million, 250 million that was part of the grant, partly to cover 50,000 cover the operations, but the 2.2 million was a grant so that they can then borrow to the businesses and over a period of time sustain themselves as the business. So we didn't just give them a pure. So we try as they start to give them some grant for themselves to sustain. So they will be drawing down. They do have the NCR certificate, but what we're talking about is he needs the FSP because they're looking into expanding the business from a savings point of view and so forth, and giving advice because you need to do that if you get into that stage. I'm trying to move as quickly as possible. Chair. I think I've covered most of the issues. I think what I wanted to come out from Pagamani myself was the issue of the senior, because Chairperson, you're asking, it may seem like just junior people were dismissed, right? What the CEO is not talking to is the level of seniority in terms of the people that were dismissed within the entity. So it's clear that they didn't go there to dismiss just the junior people. My understanding from what my team told me was that the regional manager and the branch manager, and the COO rather, were the ones that were COO were dismissed, and the branch manager was just given a warning. So because this had happened at a senior level, where senior management level people were involved, the decision of the CEO and the board was to make sure that that is not acceptable even at senior level. That's why they had to take a decision of that nature. But obviously it didn't come out, and I'm hoping that they will second me as far as that is concerned. But Chairperson, we took some notes, we took some advice from the committee. Would then look into different models of doing this. But the main issue that I want to say is that this helps us to reach out to people that would not have reached out. How do we keep those sustainable? How do we keep those to grow? Is what is the work that we need to do now going forward. Thank you, Chair.
Gigi, do you have a minute?
I was hoping the 10 minutes will be gone so that I can. I'm really struggling with the. Thank you very much, Chairperson and honorable members. I think for me, this session was an eye-opener, and I need to say that up front in terms of what needs to be strengthened from the department side in terms of the role that we play, oversight role. And again, I can see now on hindsight that maybe we're supposed to have all of them here, because I'm wondering that those that are not here, of all the MFIs that we have, they are thinking that they wonder also why they are not called. It's not like necessarily maybe that they are doing fine, but maybe there were issues that were going to come out. As a department, we will definitely, some of the things that were said here, hence we have Mr. Patla here, that came with the DDG to make sure that we note on the issues that we need to follow up on. And so the MFIs should also not be surprised, because some of them never heard of me, but they will now do, because we need to really engage at this level. And when I heard the honorable members talking about the issue of loan shark, those are some of the things, CEO, that we are thinking we're going to go back and look at to make sure that this particular MFI, it's professionalized to such an extent that it does what it's supposed to do, and it's not seen as like, you know, your normal loan shark type of thing. But really, we would like to appreciate. But in terms of us, I need to emphasize, in terms of us needing them, based on the presentation, I think we do, but I think maybe CEO, it's a way of the how part, the model on how we need to continue looking in this and learning. Because the questions that were asked today are very tough questions. And I'm glad that the questions were asked to those that deal with these particular matters and for them to be able to answer. And again, for us to remain truthful, especially when we are handling government fund, because the state funds is not ours, it's not for the CEO, it's not for me, and the money must do exactly what it is supposed to do. Because if one of us is not doing what it's supposed to do, it then reflects like it's everybody else. So those are some of the things that we will definitely be looking at as we go back. And because for now, we were relying only on quarterly reports, and when you read a report that says this has been done, this has been done, this has been done. So these things came up because of the visit of the portfolio committee, the oversight, which for me assisted to uproot, and we were able to get what we were supposed to get. So I would really like to thank and appreciate this particular opportunity. We will have our own meeting with the CEO and the MFIs, including those that are not here, so that we are on top of the game. Even next time when they are not here, we are able to respond. I thank you.
Thank you very much, DG. You were not talking, looking at me. I could have stopped you way back. But anyhow, you're wise to look at the CEO. Honorable Mafagani, it is 1 minute now past 2, and we have agreed that we are going to close at 2 o'clock.
I just wanted to say my questions were not answered, but because it's the department, I will email them. I will send it administratively. I asked questions about the grant, if they've received full grants and all of those questions. But it's fine. We will. I will send it administratively.
Okay, maybe because Bona will keep on seeing them. Yes, I see you, ma. Bona will keep on seeing them. I think you can still continue to ask that type of a question. Mema Tulelwa, I see your hand, but we have closed.
Oh, thank you, Chair. No, I wanted to say that we had some recommendations for the department. I think your team and the management, we can maybe, out of the days or normal days within this term, then just call the department, even if it's on Zoom, so that we give them our own recommendation with regards to each and every program that was here. We had some, but because of the time limits, we couldn't tell them their recommendations.
Oh, okay, okay. I hear you, Ma. And what I'm going to say to our intermediaries is that we are very thankful that you managed to come to Parliament when there was a call, and I'm sure CETFA is happy that the meeting went well, and I am also happy that the honourable members engaged. There were different recommendations from all the honourable members in the room. What is going to happen is that we normally say whoever were, because some of us were not there when the policy of the intermediaries were then coming to function. We need not disappoint them because they saw it as a good thing. It's only for us in the room who must make sure that that works. So all the members individually gave a recommendation. So normally we look at the majority part of it and then we continue with the work. The meeting is adjourned. Thank you very much.